So I'm still long here, guys. This is Red Ben. We're looking at NQ, and I'm actually long um, with just runners at this point, and trying to hit my target. I think I put, what did I decide on? 95 something higher, 94.75. I figured we got real close. How much? Oh wow! How far did I overshoot? 2 points. I missed my exit by my target by 2 points. I always, yeah, I use the Voodoo range levels, which are the dashes for my targets typically, and I know that they tend to get front run sometimes. 'Cause I share them um, every week, so I tend to front run them myself, and I will get out usually about 4 or 5 points below it, or at least 2 points below it. And I might have gotten a little bit, a little bit greedy here, uh, having it so close to it because it approached my limit order and reversed within 2 points of my limit order. It's probably enough just to bail on it, like that's probably the optimal play when it does that. I was getting the stream ready and I didn't see it miss. I honestly assumed it was about to hit and then looked back and was like, oh wow, they put in an aggressive seller here. But these are purple bars, so I'll just wait. I know the process says make a plan, stick to the plan. So um, you can move. It's dynamic, but I made a decision for a reason. So if you're watching it in real time and you see it that close and it just misses it, I don't think it's wrong to go ahead and exit like 4 points behind instead of 2 points behind. But like when I look back and it's 15 points lower, I don't think I can just ditch it. Like, but I could, but I probably shouldn't. But anyway, hold on real quick. Let me just make sure that everybody's got the link and that it's working. If someone can let me know if they can hear me, that's helpful. Yeah, I'll be able to explain some stuff once this is done. I'm assuming it's just going to come up and film me, so it shouldn't be long. And then we're going to look at the big chart, and we can talk about whatever people want to talk about. But the thing that I really wanted to discuss is how, because I talked about it in my earlier stream earlier this week, about how I didn't do it very well, and that is how to adjust for when you should be aggressive and when you should be conservative based on price action, at least with my method. I think it's, like I said, everybody's going to have their own system, their own process, and their own decisions to make. But for me, I have like some pretty strict rules about when I can participate in certain ways, like aggressively trade what we call 2-bar combos, for instance. Like I've got rules for when I'm allowed to open up my playbook to more aggressive trades, and then when I'm not allowed to do that, and instead I can only take the highest odds setups that work so often that it's just almost always a mistake not to take it. Hold on, let me just open this energy drink here. But I think, like I said, even though not everybody's using the same system as I am, it's I think that recognizing what the process is for me may help you break down what the process might be for your own system. For anybody who's new to my screen, what we're looking at is, first of all, it's NQ, and these are Renko bars. You can see it takes 24 ticks to print a Renko bar in the same direction, and then to reverse it, it's got to go the other. It's not only got to get through the bar that it just printed, but it's got to go 24 ticks the other way too, to do a reversal. And then you'll see that there's lots of colors and symbols and stuff like that, and lines. You don't have to worry too much about what each one means. Just know that they are produced through like programming, and the algo that we're using is looking at basically this, the footprint, and then also the order book, and then structure, uh, as well as like the data, other like order flow data, right? And when certain conditions are met, when the bar is closed, the signal will show up and stay there. You'll see when the bar is open that you'll still get these signals. It's not valid until it closes, because what you'll see is when this closes bullish, this yellow star is going to disappear, because that yellow star, one of the conditions for that yellow star to exist is it needs to be a bearish bar. So we have it programmed that it'll give us the warning that if we get a bearish bar and the conditions hold true, it'll be a star, but nobody knows where it's going to close, right? We know it's either going to close at 11.881.50 or 11.863.25, which are these are the points that need to be breached to close the bar, but nobody knows which one it's going to be, and so we have it warn us that, like, hey, the conditions have been met for this star down, but I know that that's only valid if we close it bearish. So if I was looking for a short, which I wouldn't here, but if I was, and that short trigger was a bearish star, I'd be able to now prepare my order and get in at 11.863, one tick below it, because by the time it got one tick below it, I would know that that bearish bar is printed and that star is valid and it won't ever go away. So, but what you'll see is in the when it's live and it's not closed, that star can blink on and off because the conditions in the bar are still changing. The order flow is still adjusting inside that bar. It's a live bar. So if suddenly like conditions shift, that star could disappear. And additionally, if it closes bullish, that star will disappear. And then a new algo signal might appear, or maybe there won't be one at all. You don't always get the warning because sometimes the conditions suddenly change at the point where the bar closes, and that's really when it matters, right? So I got long here and then took 10 points. I did it with micros, so I took a little small. It's my only mistake because I identified that there was a decent chance that we could take out this high with this price action, that high or low. And if you look earlier, it's just like mostly up, right? We got a pullback. It's pretty natural. It's almost like a head and shoulders, but it's kind of like there's like this extra little double shoulder, and then this one's the trap. If you look, it whoops. So these little triangles on mine are the apexes, and so it came back in after trading underneath it here. It closed back up above the low of that apex. So it basically absorbed all the stop losses that were down here, and then an aggressive buyer pushed it back up. And then if you extend it further, you could also say that it's also trapping off of this apex. See that? Like this one didn't quite reach it, so that was a lot harder to take, but then it came down and it got underneath it again, underneath this one, not underneath this one, but underneath this one. And then they, that was a support at one time that was broken, and so now they tested under that broken support, and buyers show up aggressively, which is what what most of the algos are, either a momentum signal or a sign of aggression in the order flow. And so when that happens, you can get long, and you'll usually get 10 to 15 points. But in this case, I identified that at least this high, this apex, was vulnerable to get broken. Like I said, I intended to take profits right about there and missed it by 2 points. So we'll just have to see and wait and see if they pay me or not. I am suspicious that they may not pay me. If you notice, Trading Perform Room member Ron introduced us to adding MACD a divergence. Whoops, I'm measuring the wrong one. It's these two. Right, so this one is lower than this one, and this low is higher than this low. And so the MACD histogram is divergent, and now we got this trap. So it makes it a little bit bullish. Man, are they gonna rip it back? I mean, out of my cold dead hands is kind of how I feel. Like I don't want to get trailed all the way back, even though it's only 2 micros. That would suck. But there's only 30 minutes left in the day, and so the problem is if it trails too much, we'll just run out of time, and it wouldn't be reasonable to expect it to bounce again. So we do have an apex right here. Here, let me just erase the lines here. Yeah, see, I think I missed my exit is the truth. Because this pushed really hard through here. That should have been the impulse move. And this had a lot of volume. And they trapped it. So it's probably done. But in holiday trading, and especially the upside, you just never know. And part of me feels like I took the risk of taking the trade. And I took it with smaller size because I wanted to take it with micros so I could take the trail. And so psychologically, it's difficult just to like give up on it. But the truth is like it did what I thought it was going to do. It just didn't fill me. So I need to be reasonable if they run out of gas here. So we'll just have to see. And then, like I said, once this position is off, we can look at other things. But feel free to type in the chat if you have questions, like burning questions about anything. My algo looks a little bit different than Simon's. So in the room, my coach uses an algo that looks like this. These same signals are also on my chart, but they just look different. Like, for instance, the boxes. On Simon's chart, he has green and white boxes, where I have green and orange candles or bars. So that's one difference. And like my colors are a little bit different. I use shading rather than lines, but a lot of the things are the same. Just more. And I've just added some other ideas so that I can have the option to trade more aggressively. It gives me like more choices basically, which I will show you in a minute. Man, they're not gonna pay me, are they? Let's see. So this shaded area here is a low volume node. You can see, and so they're trying to bounce off a low volume node, which makes sense. And the purple bar coming into it suggests that buyers were pulling their orders, and then suddenly a buyer showed up here potentially, but they'd have to close it bullish to really convince me that we're gonna save it. So, like I said, it's unfortunate, but this is the risk you take with holding runners. Is if you're not quick and you're not right on the ball, you can miss it if it doesn't hit your target. Like I had the limit order in there, it missed it by literally 8 ticks. So. But yeah, like I said, you can see that. They it's slowed down significantly compared to what it was doing here. I guess I wasn't in the stream at that point, but once it landed in here, it's just kind of stalled, right? There's no urgency. You don't see anybody urgently pushing. Like there's no what you would expect here at the end of the day is that you'd have shorts that were stuck in a trade that they want to get out of urgently the moment they see an opportunity. And that's what we've been seeing is every time we dip, we just get this like urgent rush. Here it looked a little shaky. No, it was here. This one looked fine. I don't remember which one it was. One of these was already looking a little shaky, where like it was just taking forever to even fill the apex bar. And then this was really fast, which isn't what you want if you're long. And then this was relatively quick, and now we've just stalled out. So if I had to guess, I would say it's done, but that's just a gut feel. I don't have a reason to be bearish. Oh, you know what? If the volume's at the high, I do have a reason to be bearish. I can exit. Yay. All right, so we've gotten under. Oh well, if we close the bar if we close the bar bearish, then we've gotten volume underneath. I'll show you in a minute. The volume of the bars has gotten underneath the volume of the waves, and so it's basically just looking at like time frames in relation to each other, and the way that volume shifts and price tends to follow volume. So if you monitor, if they don't close it bearish, it's okay. But if you monitor where volume is getting put in on the on a time frame that looks at each of these rotations, if you look at that volume, which in general is going to be this dashed blue line on my charts, that dashed blue line is where most of the volume is, and so if we get, and then the yellow line here and all the dashes and the bars is where the volume point of control is within the bar. So considering all of the prices here, most of the volume in that bar during this behavior, most of the volume was here, right? And then it rose, and then it rose, and then it rose, and now it's falling, right? So see how like you can see where volume is going with the yellow line, and what I'm looking for is yellow line crossing dashed blue line, and then printing a bearish bar below where that happens. So here, it's close because it's right on. If you look really close, the longer term rotational volume is lined up exactly with the dash where all the volume is on that bar, and that one closed with aggression. So you could conservatively exit there, but sometimes if it's followed by a purple bar, sometimes you're going to get a bounce if it's bullish enough. The absolute, like when it's done is when you have a bar that's not purple but it closes bearish, and the line, the yellow dash or the yellow line is below the blue dashed line. Or you could just measure with the DVP tool where all the volume is on that rotation down, and it puts a pink line right here. See that? So once we get bearish bars that aren't purple underneath it's probably done. Sometimes all you need, even a purple bar, is sometimes enough to kill the up move. That a purple bar isn't always safe, but the reason I don't necessarily consider the purple bar with the volume below as like a breakdown is that the purple bar forms when buyers pull their orders from the order book. So you can get this little bit of extension, especially on this tiny little time frame. You can sometimes get this little bit of extension, but there's still a buyer there. He was just waiting for a better price. So getting like one or even sometimes two purple bars and then immediately getting a jump that retraces those purple bars, if it's bullish enough, it can actually retrace all the way up. That's what we call that a 2-bar combo, because it will often, to get retraced back through the purple bar, you'll usually get a sign of aggression here when it closes bullish. Something like a star, or a mine, it could be this little square, or it could be green, or it'll be a diamond, or an arrow. It'll probably get something, because it's difficult to take this whole bar back all at once, because buyers were pulling their orders here. And so if it's bearish, it wouldn't make sense that we would close a bar bullish, because buyers are pulling their orders. So for the bar to close bullish, after buyers pull their orders, you generally need some pretty heavy aggression. So it doesn't always occur, but when you get the purple bar followed by a star up or any aggression to the upside, you can usually, if it's bullish, you'll usually get an extension. That is not the case when it's bearish. When it's bearish, it will fail over and over again. And the inverse of that is pink bar on the top, followed by a star immediately after it. So if this bar wasn't here, and you had this pink bar immediately followed by that star, that would be the inverse of that. Or a pink, if this bar is pink, and then you have these other signs of aggression, That would be the same thing. And so what you'll tend to see is at the apexes of these rotations, you you tend to see a lot of pink bars at the top and purple bars near the bottom, because that's just the way the market works. It moves until people give up, and then it moves the other way. So once people start to capitulate and they're like, okay, I don't want to be a buyer anymore, suddenly someone's going to be like, you know what, that's my sign to buy. And so I'm not going to buy the purple bar. I'm going to wait for someone else to buy after the purple bar. And once I see that they've bought so much that they've retraced the entire thing and closed a bar bullish, if we're in a bullish trend, I'm going to expect them to follow through with at least another bar or two. So we'll see. But like I said, if they close bearish, I can just exit this trade. Not because it always fails, but because momentum in that case has been lost. And we would have to wait for them to get under this bar and then pull back up again. So I would be giving away like 15 points. So I don't, and you don't really want to exit when there's still a chance that the trend is intact. Like, otherwise I should have been exiting right up here when I saw my order got missed, right? Like, you either need, in my opinion, if you're gonna bail on runners, I don't put my stop at break even. That almost always gets hit. But once I've gotten this extension and then a higher low and another extension, it's typically okay to trail your stop to like somewhere underneath some support. But the problem is like I said, you can get under this with a purple bar and then immediately bounce back up, and it'll extend. So no matter where you trail your stop, that's always a possibility. You just have to be reasonable with it and think about like how much you're giving away. Like, what I'm thinking about is considering that there's only 15 minutes left in the day, my maximum favorable excursion is probably back up to 96. I doubt it'll go much further than that in 15 minutes. And even that might be a little bit of a push. And so that's like 30 points. And so I don't want to save 10 points. What am I trying to say? I don't want to risk an additional 30 points just for the chance that I might get 30 points to the upside. Not on a runner. There's really no reason to do that. So all the risk was taken down here. I don't need risk up here, unless there's another setup, then that's different. But if there's no new bullish setup up here, in a way, if it's like, okay, if you were watching up here and you're like, it's probably going to pull back to this support and then it might bounce, well then it makes sense to actually exit the trade, right? And that might have been optimal here, but I had looked away from the screen and this happened rather quickly. And then I just kind of froze here and was like, well, at this point, they're runners, what are you going to do? And it's never wrong just to let your runners go. Like, if you do that over and over again and you have a system that occasionally catches some big runs, it's probably not a bad idea just to leave your stop where it is originally and just let it run and see what happens on a trend day like this. And this has definitely been a unidirectional trend. You don't want to do that on a balanced day, though. But if you have a reason to think that you are positioned with the trend and you don't have to have a lot of like nominal risk, like the only risk is like profits, it looks like they're gonna trail me out here. All right, so let's see. They don't pop this back up, I will immediately exit. All right, well, that's gonna do it. Yeah, it looks like I said, it's purple, so I don't love letting go on purple, but they'd have to immediately chop. Yeah, they're not going to do it. So I'm going to go ahead and get out just a little bit above break even, which is unfortunate, but it is what it is. I should have exited up here. It literally missed me by 2 points. But at this point, it doesn't. There is a potential long if it trapped back into this, like if it closes back here. But there's no time left. There's only 15 minutes. And now that you've gotten underneath this volume with a real bearish bar that's not purple, there's a good chance that this is now resistance. I probably hesitated a little bit too long there, honestly. I could have just exited right away, but I like I said, I don't like seeing the purple because it can easily bounce when it's purple. But if that was a real trade, like a trade that wasn't just a runner but had like risk on it, right? Other than just giving away profits, you have to have a hard stop, right? And in this case, I was just being indecisive with the runner. So yeah, there's only 14 minutes left in the day. It's technically valid, but I wouldn't take it. You're also now underneath this LVN. So, and if you look where all the delta is, oh yeah, actually I could have seen this too. I missed this yesterday as well. There's so much delta, aggressive buyer delta at the highs that becomes new resistance. And this needs to act as support for it to work. So maybe I could have, even though this was purple, I might have been able to get rid of it, considering that we got underneath all of this aggressive buyers and we didn't hold in the same spot where people aggressively sold back here. So I could have, for instance, I could have probably trailed my stop all the way to here. So get in here, initially stop is underneath this bar, take profits on the way up, hold runners. You really want to get out here, right? But I missed my exit. And so at that point, I could have probably trailed my stop all the way up to here. Just seeing the fact that we have heavy delta up on the top and that it's blue on the top, which means aggressively on the bid. I'm sorry, on the offer. And then it's red underneath it, which means it's aggressive on the bid. So if you get through this, then you need this one to hold to have any real chance of breaking back through, though, because otherwise these guys are trapped when you trade under them. They're off sides, right? These are aggressive buyers or people hitting the bid. They're market buying. We don't know if they're entering or exiting, doesn't matter, but potentially they are entering a trade up there. Buying the breakout is what they're basically doing. See, it's up. It's this breakout. See that? They're buying that breakout. All of this aggressive all these aggressive buyers get trapped up here. It's not always bearish because sometimes it's so bullish that it doesn't matter. It just goes back to a new support and makes a higher low and bounces. But that higher low needs to either be structural, right? So like something like what's it called? A complex pullback, like getting down here underneath the apex that wasn't the primary higher low and then bouncing, or like it's almost like an inverse head and shoulders, if you will, that kind of thing. That there's a structural reason to find it. Then there's also the LVN based on the profile. Hi, Cat. And then the other way to think about where support should be is, well, wherever you had aggressive sellers, if this is still bullish, those aggressive sellers should be covering, or they should be buying there. And you can see here, instead, we just got more aggressive sellers. So it's always easier to do in retrospect. But in retrospect, this was my first sign that things might not be going my way anymore, right? Getting an aggressive seller right at the top. And then this was what I missed that probably could have gotten me out of the trade. And I would have gotten out of the trade right here. Instead, I wanted to see if this held and got trailed out basically right down here, right? And so you can see now, if I don't think they're gonna rip it, but you can see that when you make a suboptimal decision, the follow-up decisions are harder because what your brain starts thinking, at least for me, is I get stuck on I didn't do the thing that I was supposed to do. I didn't get filled, or my expectations were not met. And so therefore, whatever the choices are, whatever the remaining choices are, none of them are going to seem right, because the right decision, you already missed that opportunity, right? And so being able to kind of have a clean slate when it comes to decision making, um, despite maybe making error, is something that humans have at least I definitely have a really hard time with that. Once I've made one error, the chances that my next decision is going to be optimal is like exponentially decreased. Um, yeah, so it's important that your process mitigates those errors. So, for instance, if this is something that would happen to me often, it's not a problem I usually have, but today I didn't do it very well. But let's say I was like really struggling with when to release runners before my stop, right? When to trail my stop. If that was my question of like, if I look back at my metrics and I'm like, okay, all my entries are good, I'm putting my stops in the right place, my targets are okay, but when I hold runners and it fails, I'm trailing my stop to the wrong place. And I know that because, let's say, whenever you trail your stop, it takes you out and then it goes to your target, right? So what you would then want to do is you'd want to go back to your process, whatever your plan is, and your rules for how you exit trades after like runners, right? And you'd want to think about what you're naturally going to want to do when your optimal decision is not available. Because, like I said, that's where these mistakes happen. Usually, most of us. I mean, you can make an execution error anywhere, but even experienced traders make mistakes that compound on old mistakes, on previous mistakes, because they're stuck thinking about how the optimal solution, the optimal decision is no longer available. And so you have to go through that process like I just did. Like, well, let's see what's the evidence, right? And your system's obviously going to be different. You're looking at different criteria, but you'd have to go back and say, okay, in this situation, I had aggressive delta that I could have based my decision off of, and given me a bigger profit margins because I could have saved the profits that I gave away when we trailed out. And so then what you'd have to do before you implement that is you'd then have to go back to other situations, and this is why you keep a trade log, and why it's so helpful to have something like an algo that I can just pull up any date and the signals are still there, and I can say, okay, did I have this condition in this other situation where I didn't trail my stop correctly? Or you could just cheat and go to every high of day and see how often does the high of day have this pattern, right? And a lot of times that what's it called? The runner that gets trailed back on you, is going to happen after high of day, right? So that would be an example of how you would build into your system, like ways to mitigate those likely mistakes. Because it would be great to think that we could just stop making the mistake. That's like, right? Like you could just say like, oh, I'll just get better, and that's okay. Like, yeah, like do that, but right, work on it. But at the same time, you need parameters. You like, if I don't actually study what I could have seen, or when I didn't see it, what information was there, but I wasn't focused on it because it wasn't part of my process. The faster you figure those variables out, the quicker you can backtest it. And a lot of people just hate the idea of having to spend time with the market when it's not open, and like look at, because you don't get paid, right, for like backtesting. But I'm telling you, the difference for me when it came to going from being a boom bust trader who made money for like a couple months and then lost money and then made money and then lost money, and then made money and then made money and then made money and then lost a bunch of money, right? Like those kind of variabilities, the thing that changed it for me to going more like just consistent. I mean, obviously I still have losing days, but to having like more consistent returns where I know what an average day is going to be like, and it's rarely going to be much different than that. That all changed when I had a system that I could go back and backtest, and I actually spent the time to do it. Right? It's one thing just to be handed, like, if you're in Simon's room and you're like a premium member, like, you get this on your desktop and you can do whatever you want with it. You can do nothing with it, right? Like, it doesn't force you to trade. It's just giving you information, and it's helpful. But if you want to make the best of it, I mean, you're paying for it, so you might as well. What I would recommend doing, I spent like my whole entire first year doing with Simon, is whenever I found something that I didn't understand, I just went back and found like random places where that happened. I was just like, wow, that's an interesting pattern. I didn't expect this to happen. What was going on around there? Okay, let's see if that pattern exists anywhere else. What about 2 years ago? Was it still there? You can look, right? You can just change the date and you can look. And so then once you find those patterns, you can be like, wow, it'd be really nice to know, for instance, like when I get, let's say a star that's on a purple bar and it comes above another star. Let's say that combination results in a big fall often. If you have this on your desktop, you could then go in and say, okay, every time that happens, I want you to color this one blue, right? And then you don't have to think about it anymore. It's just in there. And so that's why mine looks different, is because over time I've found additional patterns that I'm like, wow, it'd be really nice not to have to think about the fact, like for instance, these diamonds inside the bar, the red ones, and then on the other side it's white. Those are built because I knew I kept on seeing that whenever we had a really big volume bar at the apex, really big volume bar at the apex, really big volume bar at the apex, and then the very next bar filled way faster and it had aggressive buyers in it, that we tended to get extensions. Now, it doesn't always work, right? It doesn't always work. I don't know if this one's going to work, but it works often enough. And so I'm not just buying every single time I see those, but if I had a reason to be bullish down here, which I did, right, which we talked about already, it was a trap here or here, either one of these apexes, it came underneath and then immediately came back up. Well, when I see that diamond on there, I don't have to look down at the volume and measure things and be like, well, where's the volume here? Oh, it's all the way down here or whatever. Like, I don't have to do all that. I can just say, okay, I see a diamond, it's a trap. That's usually a good play as long as it's bullish, and I can just buy it, right? I don't have to think about it. And then what I used to do, which was even harder, is I was looking at this, right? And I was like trying to, and these are all numbers. If you're not familiar with the footprint, like these are numbers, right? And so, yeah, you could color code it and stuff, but I'd be thinking about shapes and like, oh, that's a B profile. That should be bullish. I just need a retest, right? There's nothing wrong with doing that, right? Like, it's just a lot of processing mentally, and I would lose the big picture really quickly, and I'd just get stuck and wouldn't know what to do. Let me just see real quick. Just got a message in the chat. Hold on. Oh, cool. Nice. Okay, awesome. All right, so there's the bell. And you can see we did not get to my target. Just missed it. So I mean, I don't love my decision, but I'll take it. The problem is that my exit is here, right? And like you can see that, where did it come back to? Exactly the spot that I said I probably should have trailed my stop to, right? It didn't even actually make it back up there. So that's an adjustment I can make, and it's not hard. I just need to pay attention to this, or I need to figure out a way to program, which wouldn't be impossible. When you have heavy delta on the offer at the upside, and then right under it or nearby heavy delta to the on the bid underneath it, and that creates a likely support if it's bullish. Okay, so let me quick. Actually, let me. I'm going to pause this real quick. I'm going to use the restroom. Then we're going to come back. I'm going to look over the day, and we're gonna talk about. I'm going to discuss how I decided to be more like yesterday. If you were watching my stream, I talked about how I missed opportunities yesterday because I wasn't aggressive enough, and I didn't identify that waiting for the highest odds setups in a grind up market is just not going to produce very like I'm not going to have I'm not going to have a lot of trade opportunities. The good news is if you stick with just the high odds trades on pretty much any day, you're not gonna get crushed, right? So the starting point should always begin with only the most conservative trades. But what I'm trying to build is a part of my plan, part of the process being, here are the things that you can, if you see this, you can start opening up your game and start introducing other setups that I know work in conditions when it's unidirectional, but not necessarily when it's balanced, or certainly not when you're fighting the trend. So I'm gonna go over some of those things. Now, some of them you can only see on my algo because I've added these signals, but the truth is you can find them here too. You just need to do like more measurement, and it might not be readily apparent, but it's there. Like I said, because I found it there, I just had to built the trigger, or the signal to trigger me to know that it happened without actually having to do any like analysis, just to see like, oh, there's a yellow square, right? Like I don't have to think like, let's see, did it go past the volume? Yes. Does it have volume higher than the previous one? Yes. Does it, right? Like I don't have to go through the checklist. Like the algo does that for me, and it's just like, here's a yellow box, right? And it's so much easier now just to say like, oh, look what happens when you beat yellow boxes. Look what happens when you beat yellow boxes, right? So then I can start building hypothesis that perhaps when you get behind a yellow box, maybe you should be more aggressive. And suddenly you can build a setup that way, or even build part of your process that keeps you safe from being too aggressive when you shouldn't be. So like I said, I've got a few different methods that I use to decide when I'm ready to open it up, and I'm going to share those with you. I'm not sharing them because I think that everybody should do what I'm doing when it comes to like the what the signal should be. The reason I'm sharing it is I want you to see what the logic is behind it, because you might view things differently than I do, and you might use a totally different time frame than I do, or maybe you're trading a different instrument, right? Or maybe you don't. Yeah, like it doesn't really matter. But the truth is that no matter what you're trading and no matter what process you're using, you need logic in your system somewhere to make these decisions. They can't, in my opinion, that you're not, in my experience, trying to just say, I know what bullish looks like, and when it's bullish, I'll be aggressive, is not good enough. You need to have the parameters objectified so that when you're under duress, especially like if you make a mistake, you can just go back to your process and say, okay, I might have made a mistake, but this is what I do. I'm going to go back to this. I'm going to go through my steps of what I do every day, and then I'll know what to do from here. Because I'm telling you, there's been plenty of times where even with the process, my stress level increases because of mistakes. And back in the day, like these days, those mistakes might result in a 15-point stop, or something like this, where I give away 20 points of profits that I could have kept, right? That's usually what, and then I fix it by building into it as best I can and practicing the new setup or the new aspect of the process. Back in the day, rather than just losing like 15 points or giving back 20 points of profits, I would hit my max loss, because I'd make one mistake And then I'd try to fix that mistake with a method that I didn't know if it worked or not, but it seemed good at the time. And then when it did work, and I didn't lose, well, then I would use that the next time because I'd assume that since it worked yesterday, it'll work today, and then I'd blow up because it turned out that it just worked once, right? So it's like even if you think that you're using a logic-based system, if you can't teach it or like draw it, right, or explain it in like a step-by-step manner of this is what I look for first, when this happens then I can do this. You don't have to necessarily think through it every time after you practice it, right? It eventually does become kind of second nature, but you better be able to say what those parameters are, because when you make mistakes, the solution needs to be go back to my process and just do what I know works, or don't trade, which is so much harder than it sounds. But that is the solution. And that's not just coming from me or my coach. That's coming from pretty much every successful trader I know. And the other thing I can tell you consistently is I know a lot of really smart, talented people who trade that don't have that structured system, that probably have a ton of potential as a trader, but they don't see the results consistently, right? Like they could be an amazing trader. They've got all the traits, they got the discipline, they got all that, but they're missing the structure of like, what do I do? And they think they know, right? Because like I said, I was here like a year and a half ago. Like I knew how to read a market. I could tell you when it's bullish. I can look back and be like, oh yeah, that would have been a great place to buy. And then when it comes up, I'd sometimes get it right. And so I would make money. But I wouldn't be able to tell you when not to do it, right? When doesn't that work? And so when it doesn't work over and over and over and over again, I'd bust, right? Maybe not lose all my money, but I would lose over and over and over again and not know what I'm doing wrong. And then even if I just made one mistake, it was very common for my confidence just to be shattered because I had nothing to go back on that I had data on, right? Like it's just, for me, this isn't how everyone's brain works, but for me, I needed to see it. I couldn't just have someone say like, hey, if it's bullish, just start buying green bars and you'll make money. Like that wouldn't work for me. Like that might work for some people. That's not going to work for me. Like I'm going to be like, okay, what's going on with this green bar and why does it seem like it always produces another bar to the upside? Let's go back and research it 200 times and see what happened, right? And let's see if there's certain conditions where it should happen and certain conditions where it shouldn't. Are you going to be right every time? Of course not, right? No system is going to be right every time. But it sure is nice to know that, like, for instance, this green bar and this green bar is going to be way more effective than its inverse, which is the orange bars. Whoops, I didn't point to the right bar. The inverse, which is the orange bars. The green bar and the orange bar, they have the exact inverse programming. Yet, because of the price action, the green bars are working and the orange bars get stopped out, right? Because the way these are supposed to work when the conditions are right is that you can, if this was an entry, you'd put your stop right here and you'd put your entry right here and you'd short and you'd get totally owned, right? And now this one would work, but it's maybe 50-50. And that can be infuriating and you end up missing out on every one of these moves because you think they don't work, right? Because you don't know when they work. Whereas you can't just say the green ones work and the orange ones don't, because when it starts to get heavy, guess what? The green ones will start to fail, right? So having some parameters for when to do what you usually do and when you can start doing more is really helpful. So let me run to the restroom and I will come back and we will, like I said, I'll do a review from yesterday into today, and I'll use it as an opportunity to show you where where I identified that I could be a little bit more aggressive. And we'll compare it to yesterday, which was very similar. All right, I'll be right back, you guys. Give me 2 minutes. I'll leave you with some tunes. How's that sound? All right. So the first thing we're going to look at, or the first thing I want you to watch for when it comes to figuring out whether or not it's time to push aggressively or whether or not it's time to be more conservative, is, or at least the first thing you need to understand a little better, if you don't already, if you're not familiar with the system, is the pink bars and the purple bars. So, like I mentioned earlier, these bars indicate that price is moving, but not primarily due to aggressive traders. Instead, it's moving primarily due to orders getting pulled from the order book, right? So the natural reaction to a pink or a purple bar, what you should expect in a balanced situation, is that after printing, that usually the very next bar, if not 2 bars later, you should at least see the market return back to the back through that bar. Maybe not completely, but at least trade to wherever the volume point of control is, which is here. Let me erase all the lines. The volume point of control again is inside the bar. Oh, I guess I can't get rid of this one. The volume point of control inside the bars is this yellow line, right? So wherever that yellow line is in any of the bars, that's where the majority of the volume that went off during that time period, during that price action that happened during this bar, that's where most of it happened. So like for instance, if I mark off if I want to see where the majority of the volume was between these two bars, you'll see that it prints a pink line here, and it's right on top of this yellow dash, and that's where the yellow line interacts with that bar. Why does it print it there? Because that's where the majority of the volume was for this bar and this bar combined. Now, having that running total, let me get rid of that. Having that running that yellow line tells me whether or not volume is shifting up or down compared to the structure on the higher time frame, right? Like the bigger time frame structure, not like huge time frame, but bigger than this tiny time frame. I can look and see where is the yellow line headed, and is there some natural support or resistance based on structure, support, resistance, stuff like that, that you'd expect that it's trying to return to. Now, like I said, the pink and the purple bars give us a neat, important clue to whether or not volume is moving. Let's say if it's developing, we say in one direction or another. When it's balanced, like I said, what you'll usually see is we'll print pink bars, and then the price will re-auction or return or rebid, or if it's going, back this way, back towards the low. And that's normal. It's not bearish. It's just normal, right? That's what usually happens. You'll see the same thing with the purple bars. Now, this isn't always immediate, but as you can see, it prints these purple bars. And then what does it do? It comes back up and it re-offers through that area, right? So if I mark off this, you can see that before the market went anywhere, before it made a decision about which direction it was going to go, which happened here, right? Before that could happen, we needed to come back and re-auction that price action. And what's great about Renko bars is that there's no time aspect in these bars. It's only price movements. So rather than having a 30-minute price, 30-minute bar for each of these, or a 5-minute bar for each of these, that just kind of close because the time hit a certain point. In this case, the bar only closes if you get price to go through that level, right? And then if you can't get price to go higher than 24 ticks from here, and instead it goes back through that bar and then 24 more ticks down, you're going to get a down bar, right? So that's just how Renko works. And the result of that is that you, rather than seeing, if you have like a price chart, right, that might look like, let's see, like your price chart might look like this. This is ES. Here, I'll take off these. Where if I go to like the 3-minute chart, it's gonna, you're still gonna see the rotations, right? But the closes and the opens are somewhat arbitrary because they're based on time. So you can still see these big wicks, but that'll only exist if the close of that bar happened, if that pullback, if that return back up happened at the end of the hour. Like for instance, or the end of, sorry, not the hour, the end of the period, right? So whoops, that's right. If I put this back, you get all my lines. But this is a good example where like these two bars together is actually just neutral. See that? It's neutral, right? And so when if you're watching this bar by bar and you see this, it looks pretty bearish, right? Like this looks pretty scary if you're not paying attention to volume and stuff like that. If all you see is that it closed at the low and it took over, it came back up through this range and then it came back and it closed near the low, it could look pretty scary, right? It doesn't look all that different from this, for instance. right? But in this case, the very next bar, we pull all the way back up, and they even come up and collect liquidity up here before they actually take this low out, right? And that's normal. That's just what markets do. That's not manipulation. Like, people call that manipulation. I'm sorry, you guys. That's just the way markets work. Whoops. Let me fix that. That's just the way markets work. They go from liquidity point to liquidity point. The markets just eat liquidity. That's what it does. It steals your stops, and that's what it's built to do. So what I'm trying to get at is, when you have a time-based chart, you're not always going to notice, unless you're paying a lot of attention to volume, or you're watching the DOM and you have some order flow indicators and things like that. You're not always going to notice the difference between this and this until after that big move happens, because it's the close of the bar that kind of gives you the confirmation. Like, here's a good example, right? This bar went all the way down here to this low before closing up here, and that happened in 3 minutes because it was the open, right? It was quick. And so in retrospect, you can look back in here and you can say, oh, well, that wick is support, right? And so I want to be a buyer down there, and that makes sense, and there's nothing wrong with that. But that's as far as you can go with your analysis here. We don't know what's happening inside the bar, right? And this big rip higher and this close at the high looks really bullish. But the only reason it is like that is because it's based on a 3-minute chart. Like, if I now switch it to a 15-minute chart, what you'll see is that this is a lot more balanced, right? Just in a bigger time frame. It's actually just balanced. And then I could go further, and it's gonna flip again, and it's gonna eventually see, this looks like balance, right? It's balance. But in a tiny little time frame, it's gonna look bullish. And you're gonna in my experience, you're gonna give this close way too much credit. And what I used to do is, I would see this bar, I'd be like, okay, it's bullish, I want to be a buyer down here. I'd put my order down here, and I'd sit around all day long and do nothing. Right? Because it just never came back, and I'm like, well, I guess my setup just didn't work. But the thing is like, you actually had opportunities throughout the day to get a pullback. You just didn't know where support was because you couldn't see inside this bar, right? You don't know what happened in there. Now, on the Renko chart, I don't have to worry about what time it is or how long the bar took to print. Instead, I'll just go to the same spot. So here's the open, 8:30, right? And you can see clearly the rotations, right? Started bullish. We got a pink bar at the top. It was followed by a sign of aggression, which is pretty much everything else except for pink and purple. And you can see that rotation, if you measure it from here to here, made a 61.8% retracement and bounced. Normal, right? Bullish. Okay, nothing new there, right? And now I guess that took a while. So in the small world, the 3-minute candle had been closed here already, right? So you'd have to get very small. So if you want to run with that same idea of the 3-minute candle, like, what I was trying to get at is that with this, it's clearly bullish, and there's no reason to think that the market's going to come all the way back to this low. And you might have known that if you just looked at the 3-minute chart in addition to the 30-minute. But if you looked at the, but I don't know, like, when I see this, it's pretty scary to buy up here, in my experience, right? Whereas that's actually exactly where your opportunity is, right? And I want to be a buyer down here, and usually if you want to do that, you got to buy it at open, and that's pretty tough. So I mean, here we actually did have a valid signal. We had a head and shoulders trap, Ronnie in the room took it, and he got paid. So didn't hold it as long as he wanted to, but that doesn't matter. That's that. If you saw it and you got in, you did the thing that you now need to do, and then that's a whole other part of the game to be able to hold it longer, and then when to exit, like we talked about earlier. But what I'm trying to explain here is that with the Renko's bars, I've got this structure down here that's very clear. So that's structure, right? And so the expectation once we get through that structure and we break out of it, so this structure actually comes all the way up here. So once we've gotten here, let me back it up so you can see big picture. I could just go to a higher time frame too, but I don't want to confuse anybody. So let's just look at it like this. So it continues to kind of be sideways here for a while, right? So this is all structure. I guess I'll stretch to the whole thing. So this here is like a pullback structure, right? What most people will call consolidation. And you might see like a bull flag kind of on a higher time frame, right? A couple lower lows, usually 2 or 3, and then a breakout over the structure, right? And then what happens after that breakout over the structure? Usually, do we come all the way back to the bottom of the structure? No. Why? Because there are shorts, there are sellers trapped at the bottom of the structure. The algo helps me find those trapped traders. And you can do this on, like I said, you can do this on Simon's algo too. Mine just has extra bells and whistles, but he's got everything you need there. So if I stretch this, look how long this went, right? This went all the way. This was all balance. Let's call all of that. There was a breakout here, and then all of this is balance, right? So take a look. So as long as everyone sees that, I'm going to take the purple out. So now take a look at what happens at the bottom. It's easier to see this if you just look at it one way or another. It gets confusing if you try to look like, where do I short, where do I long? Let's just think about it from one direction. Since we know we can cheat, we know it's going to be long eventually. Let's just look at it from one direction. And let's ask a question of, okay, if I'm bullish, and I think we may have broken out, how do I know that we're going to continue? Or how can I be confident that we're going to continue? To continue, what you generally have to do is trap aggressive shorts at the bottom or get sellers to exhaust, or both. And so the trapped sellers at the bottom, what that looks like on both Simon's chart and mine, is aggressive sellers at support. Where support? Well, in this case, it's this. There's a little anomaly here from the it's a high volume edge, if I remember. Oh wait, that's this one. It some anomaly on the footprint. It doesn't really matter, but it's a footprint based anomaly, right? We got under it by 1 or 2 ticks after breaking over it. See how they were underneath it, right? Let me get rid of this. They were underneath it. They actually did the same thing here with this aggressive trader, but they were underneath it. They broke through it. I'm talking about this grayed out rectangle here. They bounce off of it. They come back through. See how they trade under it just slightly, right? And look what we get at the bottom. We get a star at the bottom. We also get a triangle that's red, a down-facing triangle that's red. That is a sign of continued aggression. The star is a sign of renewed aggression. Someone is trying to either protect a short position, or they're getting short, or they're exiting aggressively from a long position. One way or another, look where they're selling. Right into support, if not below it. See that? This is below this support, right? Which is found on the profile. There's also a bunch of heavy sellers in here from yesterday afternoon. These green areas here are heavy sellers. And you can see there's actually 3 groups of them. but most of them were on this big bar here, which had a ton of volume, and then the other ones happened in this up bar here. They sold the bottom of this, and then got trapped below it. Right, so you can look at this a lot of different ways. Even if you don't have the algo, you can look at this by looking at delta, by looking at volume, whatever you want, whatever you use that you identify as an aggressive move, right? Find it to the downside at support. Once you get that, what I can now do is I can say, okay, if I can trade above him, and I can develop volume above him, meaning this yellow line and these yellow dashes on a bullish bar can get above wherever this aggressive trader was, this guy, and then this triangle too was also aggressive, and so is this diamond, and so is this orange bar, and this diamond, all the aggressive, and then this triangle too, all these aggressive sellers are at the lows, right? So if you weren't confident enough to buy here, which is fine, there's not a great setup here. Once you get over one of these guys, you can now say, okay, we've broken out. Oh, and another caveat, the breakout needs to include bullish bars that aren't pink. You can see here, we broke through resistance with a pink bar. That is vulnerable because what that means, again, is price is moving, but it's moving primarily because sellers are pulling their orders off the order book. So price is rising, but there's not really any follow through of aggressive buyers, and the result is aggressive sellers come in, right? So when you see this, that's has a risk of being a failed breakout. Same thing here. See this? Pink bar on a breakout, and then followed by a bearish signal. Pretty much all of them. Has the potential to be a top. It's not always a sell, right? You shouldn't short every time that happens, because if you did it here, you'd get crushed. But if you have a resistance like this, and then you get over it, and you put a pink bar, and then it immediately sells off with aggression, even if it's been bullish for a while, it's probably going to at least rest for a bit, especially if that occurred with divergence, right? So if you want to look for places to buy the breakout or to be bullish after a breakout, you want that breakout to sustain after a pink bar. So we got pink bars, and that broke out, right? So when we're here, we're nervous. I'm nervous. I'm like, oh, we're trying to break over this anomaly. There's a resistance up here we haven't broken yet. There's a new lower high here, and now we're approaching on pink bars. It might not work, right? And that's true. It might not, right? You've got sellers pulling their orders probably because they want to sell from up here, right? So, but then when you get this guy, this aggressive buyer, to follow through that pink bar, and then especially when you look here and you see that you had pink bars below that did not get retraced. Now I know that seller is stuck. He's trapped. So remember, those pink bars and the purple bars should get retraced, right? Look what happened here. Printed 2 pink bars in a row. Should be easy to retrace those. 3 pink bars in a row, right? Just sellers just pulling orders and buyers having an easy time pushing the market over. So it's kind of like during an auction. Have you ever been to an auction, or have you ever seen a video of an auction? And there's like a bidding war where someone's like, okay, do I have 10? And then someone's like 12. And then it's like, oh, do I have 15? And someone's like 20, right? Like that pink is telling me that there are sellers that were in the market, but suddenly they are no longer interested, right? And price is rising because the sellers have they've disappeared. Because the difference between the stock market and an auction, like at a car auction or whatever, typical auction you have is that you not only have an auction that can go one direction, right? Usually the auctions we're familiar with the auctioneer, they only go one direction. The thing that's missing from that picture, for that analogy to work, is you also have a whole nother side that can sell it back into the auction, right? So you got the buyers bidding it up, but you also have sellers offering it down at the same time, going back and forth. And so when we have balance when it comes to aggression, you'll just see these regular bars that aren't pink or purple, right? They're just white, or they're brown or stone colored. And so there's an equal amount of aggression going in both directions, or maybe there's just not a lot of aggression at all. It's just prices just kind of floating around, but it's not moving because it's not moving due to the changes in the order book. When we get the pink bars or the purple bars, price was just hanging here, and then suddenly sellers started to pull their orders from the order book, which everyone can see. Keep in mind, on futures, it's one joined order book. And if you ever look at Bookmap or just watch the DOM with the deep market data, you can see where the sellers are. And so when sellers start to pull their orders from the order book from higher up, the result usually is price is going to go higher. But what matters, that's just normal, right? You see sellers disappear that used to be there. Suddenly there's going to be buyers that come in. That's what a pink bar is. What matters more, though, is what happens next. Because if you see sellers exiting the market, like here, sellers exited the market, price floats up, even though they didn't have to work very hard. Like there's just only buyers now, so there's no more sellers, so there's just a bidding war, right? It doesn't take a lot of people to bid up the price if the sellers just disappear, right? Then suddenly, if sellers come back heavily and they retrace all of that aggressively, is that bullish? No. It's just price getting bid up to be broken down again. It's a false breakout, right? Potentially. So, and like I said, that's actually, if it's not at the breakout point, if it's just in the middle of some consolidation, you see like a pink or a purple bar just hanging out in the middle here, it's not weak or strong, right? Because it's not an important location. But we should assume that eventually price is going to come back and retrace through them, because that's just what markets do when price moves without any aggression. The natural reaction is the other side's going to be like, hey, they got away with this really easily. There's a chance that this buyer isn't actually all that confident. He bought here and he was planning on buying here, and then sellers started pulling their orders, so he's just like, well, if I can do it with one contract, I'll just keep buying and buying and buying. And then if then they follow up with selling, if he wasn't adding to his aggression, if he wasn't getting more and more aggressive as we went up the bar, he might just give up, right? Like that's just what happens. Like normally, like here, buyers are giving up as they go down. It doesn't mean it's going to drop. Well, it's going to drop a little bit, but it doesn't mean it's going to like crater, right? But the chances that it's going to go back to some support to find where the buyers are going to show up is pretty strong. But once those buyers are there, then the buyers who gave up here are going to be like, oh, okay, we found support. I guess I'll go ahead and buy again. I'll put my order back in the order book. And you get a bounce, right? So the purple bars and the pink bars, you can think about them, like I said, what they are is it's price moving due to changes in the order book. And the information you can take from that is you can watch for what happens next in that price range. Again, because it's Renko, we're not worried about time, we're worried about price. So this price range here can now be observed to see if we can retrace through it. If we can easily retrace through it, it's at least balanced, if not bullish, right? And so the opposite is also true. When you have pink bars, especially a string of them like this, that again, sellers are pulling their orders from the order book. Buyers are having an easy time just cruising through the order book. Prices just rising, even though there's no new, not any like influx of buyers. It's just the buyers that they were there before are just paying more for it, right? The natural thing to do if sellers were still around would be to retrace back down here and make sure that there's still buyers that are interested, even if price came back to support. When that doesn't happen, when there's no seller there, when they come back in and there's nobody interested in selling it any lower, that is your sign that this guy and this guy and this guy and this guy, all of these sellers sold the bottom. And it's bullish, right? So now the question is when do you buy? What's your trigger to buy, right? Because you're never just gonna like, you can't just buy here because you don't know whether or not it's just a pause, right? And then they're gonna fall or whatnot. So you really don't know that this wick is gonna be here until that bar closes, right? So the area I'm watching is maybe is this whole zone here where these pink bars are. That's what I'm watching to get retraced to know that it might still be balanced. But I don't know for sure that it's not balanced anymore until we close that bar bullish and it's not pink. Right? Because they can do a string of pink bars over and over and over again and then retrace them all. That can still happen. Once they get this reaction, like I said, I know these guys are trapped. I'm not a breakout trader. I'm personally not buying this because I have not found that the risk reward is advantageous with futures. But the typical way to trade that would be, if you were a breakout trader, is you would buy up here and you'd put your stop under support and you'd just see what happens, right? That's just too big of a risk for me. I can't take 30 points of risk on NQ. That's not, I can take half that, maybe 15 points, but not 30, right? So instead, when I see this behavior, and especially when I had aggressive sellers at the lows, these triangles and the diamonds and the stars, and in this case there's no stars, but the orange bars, right? All these other, anything but the pink or the purple, I know these guys are trapped, and so the likelihood is that these prices will be very difficult to return to. So part of my process is once these guys are trapped, and like I said, I know that here, right? I don't know that till all the way up here. But once they are trapped, I can come back here and can say, okay, who is the very lowest seller trap? The one in the very worst position, right? And I'd say, well, that'd be this guy. He is utterly trapped and he's not going to get let out. If we return into that price range, chances are it's going to bounce as long as it's still bullish. Plus, if it doesn't bounce, I now have really good information because now I know to look for trapped buyers because it should bounce as long as it's bullish. So hold on real quick. Let me just clear my nose here. Hold on. Pretty much finally over this cold, but still occasionally getting stuffed up. So, okay, especially the more I talk and breathe heavy. So yeah, this is an area I do not expect to be tested. That's what I'm saying. If I'm bullish at this point, after this breakout, I'm now thinking, okay, the likelihood that I'm going to come back here and get a trap back in opportunity, which is our highest, the highest odds trade that we have, which again, if you're just joining us, looks like this, where you have an apex. For me, it's these little triangles that are sideways, the little flags. You have an apex that gets traded underneath, and then it immediately comes back with a bullish bar, especially if it's got signals on it. That's the highest odds trade we have, and it works a lot, right? But the problem with it, the only issue with it really, is that it doesn't always set up. When it's really bullish, you don't always come back here again. And so, like I said, this guy is now trapped. So we can mark him off like this. He's trapped. And it goes all the way down to here. So there's sellers trapped down there. the chances that we're going to come down there immediately are not good. And if we did, I probably don't want to be bullish because we probably trap buyers, right? So instead, I have to start looking for other places to buy. I need different ways to get long now that I know that it's probably bullish. But I don't want to buy the breakout because I need to have controlled risk. So what do? In my personal opinion, what we should be doing is we should be looking to the left. We should see where would be a reasonable spot for buyers to support based on what happened before these guys got trapped, right? Because that will usually give you at least a good guess and sometimes an exact point of where to look to the right is by looking just to the left above. Again, we're not going to get down here, right? So I don't care what happened down here. I'm talking about above these trapped sellers. And really, if you want to be really aggressive, rather than taking the seller who's most stuck, you could actually take the seller that's least stuck. It's just that you have to be ready to possibly take that trade twice. So again, when I say stuck, what I mean is we've closed a bar and we've gotten the volume developed above wherever they got stuck. So the volume on that bar that closed bullish after the pink bars, the one with the wick that didn't reach all the way down here, is this one, right? If you look, there's a dashed blue line right here, and that's where most of the volume is over time. And then there's also this yellow line, which is where the volume was in that bar. They line up, which is great. When they line up, that's a good sign. So that's it, right? So that's anybody who got short or sold below that is offsides, right? So now I can say, okay, as of right now, this one's trapped. This algo is trapped, right? That was an aggressive seller. This triangle is trapped. This like the orange bar and the diamond, like those aggressive signals, whoever was trading in there aggressively is trapped. This triangle is trapped, right? This diamond is trapped, and this diamond is trapped. This triangle's trapped, right? All those guys, offsides, because their volume point of control is below it. Now the ones whose high goes beyond the point where volume is developed, like this one, is going to be the hardest to keep trapped. And it's also the one who's most likely to defend his position. Because most of the volume on that bar was here, right? And it's hard to see the blue line there, but you can see the yellow line. And so most of those guys in that bar are trapped. But some of the sellers sold up in this wick, right? So they might be willing to defend their position, whereas this guy's probably not. So what we can do is, looking forward, we can say, well, if we can get price to come back into this general area where this guy who got partially trapped but might have a wick where people might try to defend, if that defense fails, should we be getting long? Yeah, I'd say yes. So mark off that area. High to the point of control, because we know the guys down here are trapped for sure. And they're probably not going to defend their position unless they think they trap buyers. And that's where this gets tricky, is because it goes back and forth. I don't even remember what happened, so let's just see. We get pink bar, another pink bar, right? Volume breaks over the voodoo range level without, or not volume, price breaks over the voodoo range level without a lot of volume and without a lot of aggression. What happens? Sellers try to attack. Why? Because they got short here, and they want to defend their position. They don't want to get hurt, right? So we don't buy yet, but if they defend, if buyers now protect this zone, well, then we can probably start to look for longs. So let's see what happens. Okay, sellers follow through with the triangle down. We got price below this point. But notice volume has not gotten below it. So there's just a few sellers down here testing the waters, but the majority of them are still in this likely defense zone, right? It's not bearish yet. Again, because these guys are trapped down here. It's not bearish yet. But it's also not a great time to buy because there's no sign that buyers are actually showing up here. Now we get a volume shift. Volume shifts bullish. And where does it happen? Right here. That's a great sign, right? This is exactly what we want to see if we expect price to go higher. It's a very aggressive buy because it's not located in the right place on the channel. These green bars, we want them down here at the bottom, the brown or orange, not at the white. We want to buy on this bottom channel and we want to sell off the top channel. So this would be a very aggressive buy, but it's, you know, if you're trading momentum, basically, you're getting a pullback right into this zone and they're shifting volume higher. It's not always going to work right away, but sometimes it's just going to go, and if you don't take it, sometimes you'll miss it, right? I personally need to wait until it gets down here, unless we are going pretty much straight up. So the sellers attack, right? But notice their volume, the yellow line, has not yet gotten under this white line, right? So they're trying to defend these offsides traders, right? They come down with a purple bar. What does that mean? Buyers that were willing to buy here suddenly pull their order. Why would they do that? Well, probably because they bought here, or they thought that there would be more aggressive buyers, and when they didn't see buyers show up, some of them started to pull their orders, and then others saw that and they pulled their orders. So now suddenly there's just sellers in the market again, and we're coming back into some of these other trap traders, but it's purple. We did get volume to shift down, but it's purple, which means, again, if buyers suddenly show up now, guess what? These lower ones are still thoroughly trapped. See this? This is why I usually use the lower one, because that's like your last resort. He's still offsides and very trapped. But some of these guys are getting an opportunity to exit for break even. What do the sellers have to do to exit to break even? They have to buy, right? So if this diamond and the guy who sold this diamond, the guy who sold this triangle and this diamond and this, arrow and all these guys, if the orange bar, if all of those shorts recognize that this is probably bullish, what are they going to do when we come back to their break even? They're going to exit. They're going to exit by buying, right? So they're trying to aggressively push here, but buyers are just folding. And suddenly buyers show up. Guess what? That is a fantastic entrance. That is a great opportunity to buy because, first of all, it's interacting with the lower orange down here, right? That's good. Now we can see that there's a little flag here. You normally don't see that signal for 2 more bars, but in retrospect you'll see them. They're the only signal that's delayed, but it's because we don't use them for entries. We use them for location and we look to the right to find entries like this, right? We put our once they form 2 bars later, this will show up, and now, so here is where this signal shows up, and then I buy here, right? So I don't need it to show up right away, but in retrospect, we will see them, even though in real life you don't see them. But recognize, even without that little flag here, what we have is a bullish scenario where we have pink bars that still can't get filled. See that? So this pink bar and some of this pink bar is still not retraced, right? Plus, we still have this guy totally trapped. We have this guy trapped. And we have this guy trapped, probably. Probably. He might have gotten out. So let's say this one and this one for sure. And this one. Yeah. Those 3 are definitely still offsides. Sellers tried to push, which is usually, if it's bearish, that will produce a drop. Just like this produces a drop, right? And if it's bearish, this same signal will get a reaction. When it's not bearish, or when they're out of position, when they're not in the right place, but instead they're down here, they get trapped potentially, and then they become new support, right? Well, here he's trying to aggressively save these trap traders who shorted down here, and then buyers fold, and so price drops. And as soon as we get back into this level, where it was pink, we find a buyer, and he shows up with a green outline. You can see that bar is a green outline, right? Which is one signal. It's got a pink diamond, which is a volume anomaly, and then it's got a blue arrow, which is a momentum shift. So all of those things are happening at once. And the green outline, by the way, means that there's a big seller that came in towards the low here, and we closed above them. So it's within the bar that there was potentially a trapped seller. So like if I go to a smaller time frame, I would basically see this exact same kind of setup where we get a big seller and then a buyer that shows up after that. It's just within this bar. So like on a fractal level, there's a setup in here, but it would only be worth getting if there's also a setup structurally on this one. Well, there is, right? We've got trapped sellers down here that we've broken over with bars that aren't pink. And then they tried to go down into the pink bars and they failed to fill them. And now we're finding aggressive buyers. They are at the right location, right at the anomaly. They're also lined up with the lower side of the channel. Everything about this is great, except for the fact that it's not a trap, right? It's not a highest odds setup that you can use almost anywhere on the chart, like this. That's our bread and butter trade that works almost everywhere. This signal will only work in this specific condition. It needs to have trapped sellers below it. It needs to have pink bars, preferably, that can't get retraced. It needs to have a purple bar before it, usually. And then we need enough room to resistance that we can have risk reward. Because to take this trade, what we do is we put our stop below it, just below it, and our entry can go anywhere inside the bar once it's printed. So, for instance, when it pulls back like this, I can buy any of these prices. Not all of them, but anywhere. I can take my full size with any of them. You can see that they try to push it higher, and then they come back with an aggressive seller. Don't bail on the trade. Do not bail. Leave your stop there, because you had a structural, good process, on-process reason to get long here. It was just aggressive, right? So it's not a good time to chicken out here. It's just a time to realize that sometimes the great setups still fail, especially the ones that aren't the highest odds. And like I said, of all of the trades that the Trade and Perform Room provide, that Simon's taught, which is like literally almost like 100 trades, trade setups, this is not the highest odds one. Specifically because you need to do a little analysis like this to know when to use it. But what will usually happen if you're right about the structure, that it's bullish consolidation. And again, I'm using the algo to find that, but some people can see it on the DOM, or you can, everything that the algo's looking at, it's here. You can see it here too. Like, it's all here. So if you know how to read a footprint and you're successful that way, this process is still going to work. You're just not going to have immediate notification of where it is. And it's going to be harder to back test and build confidence and size higher. You might be able to do it, but like it's pretty tough to do it with big size, because you're going to wonder whether or not what you see is really there or not. And then the times when it stops out, which is normal, in my experience, I would then doubt the whole system, even though it's just a normal stop. Whereas in this case, I'm not saying it always works, but when it does, you know that you can be confident that your trade is working. You know right away what should happen. And then when it doesn't, you just get out and you wait for the next one, right? You don't have to worry about like, oh, I think I was wrong and maybe I should reverse. Like, no, there's just a process for start. You just start over. And you just say, like, what's the next step? So in this case, it breaks out, and you can see that. And again, this is overnight. But I can do this anywhere. You can find these all over the place. But you can see we got over this resistance, and we got over it with regular non-pink bars, right? Meaning it's not just sellers pulling their orders. Like the auction continues with sellers and buyers both being present, yet price is going higher. Should you be shorting that? In my opinion, no. Oh, and then plus we also trapped another seller. This guy sold the low. See that? Oops, that's the wrong one. This guy sold the low. And so where the volume was down here, but there were some very trapped traders that sold all the way down to this wick, right? And we know they were aggressive because we got this star here. And like I said, if you know your own way using the DOM to know what aggression looks like, that you're probably looking at
found on
something similar.
Overtly, dogs show aggression by growling, raising their lip to display the canine teeth, and nipping or biting.
Alexa, I have no idea what you're talking about. You're drunk. Go home. Wow, that was interesting. Something about dogs. I didn't even say anything about dogs, did I? That was weird. I didn't think I said her name either. Anyway, yeah, you trapped a new seller. So remember, these guys are still trapped, right? Now this one's trapped as well. And if you look here, he is also trapped for the time being, right? So there's, even though you made a higher high and then trapped back in, it's not bearish. Here, look. So this is the problem with looking at this from two directions, is you could say, wait, Ben, you said that the trap back in is the highest odds setup, so why wouldn't you just sell this? Because isn't that a trap back into the sell side? And it is. And yeah, you can get 10 points doing that. I'm not saying it's wrong. And it works a lot. It works more on the long side, though. But more importantly, if you're going to pick one time to not do it, if you are going to sell, if you are going to short, realize that they're not going to work as often just because the market just likes to float higher. But also, if you're going to pick a time not to sell, stop selling when you have sellers trapped. Right? Once you've trapped aggressive sellers, in my opinion, I don't care if I miss this, because the chances that these guys are all going to get let out in one false swoop is low. It happens, but not very often. Usually what you get is higher highs and higher lows when that happens. When does that stop? Usually when you trap buyers. Well, were there any buyers trapped up here? Nope. These are just regular old bars. There's no algos whatsoever. If you don't have the algo on your desktop, you could also measure the volume profile, and you can see that the majority of the volume was down here after this pink bar. And then you could also, and not at the top, right? So that helps. Then you could also say, well, hey, look, we have 2 pink bars here, and they did not get immediately retraced. Is that bearish? Definitely not, right? Even if they get retraced, it's not bearish. But when they don't get retraced, it's big time not bearish. It's clearly bullish. Look, all of this did not get retraced right away. See that? They're pink, meaning that price is rising because sellers are just folding. They're just like, I was going to sell, but now I don't want to because of what I see. Probably because they saw a seller get stopped here, and then an aggressive buyer quickly take it over, right? So what happens is, not surprisingly, the pink bars get some retracement. That's normal, right? You can't, let me tell you, when it comes to trailing stops, do not put your stop inside of a pink bar. Like, do not put your stop here or like right under a pink bar. Don't do that. It's not a good place for a stop. Don't trail your stop to break even, for instance. If you got in here, do not, on a pink bar, do not trail your stop to break even. It's, I mean, I know it technically would have worked here. No, it wouldn't. Look, even this one. Stop to break even, gets stopped out, wicked out, and it goes higher, right? So first of all, just don't trail your stop to break even. But if you have a pink bar, assume it's going to get at least partially traded back through. But when they don't get fully traded back, traded through, reoffered or rebid, when there's that leftover little bit, there's probably a reason for that. And it's usually that someone to the left got trapped. Well, in this case, it's this guy. He got trapped selling under this market profile anomaly. And now when they return to his entry, guess what? He buys. And what do you get? Another pink bar, another star, another arrow, which means momentum shift back to the upside. And once again, you have another higher low. Guess what? It's going higher, right? So you could technically, just through this alone, you could know nothing else about any of the setups. You could know basically nothing about the algo, and I could just tell you, look for stars that got stuck at the lows at support, right? And you could, or let's say like, where was that other one that was a star? Was it back here? That one did too. But even if if I said like diamonds, red diamonds and stars, or orange bars and stars at the lows, once you get over them, look for aggression to the upside and buy it, right? Here's your seller getting trapped. Your most aggressive buy is right away, right? And then here's your next aggressive buy. Here's your next aggressive buy after this guy gets trapped. This one is trapping this one here. If you want to be really conservative, then you wait for what we call an orthodox close, which means a high or a low. The entire bar's range does not have any contact with the trapped trader. So here's our trapped trader right here. So we need a bullish bar that has a low that's higher than that. That happens here. Now that bar is pink, so you could even say that that doesn't count if you want to be really stingy. Well, then you trapped him here, right? Once you see that, now where am I looking? I'm looking right at this orange area for any bullish signs. Right there, right? The only mistake you could make here, really, as long as you're not shorting, is you could buy out of position. And it happens. You just don't, you get anxious and you buy that out of position buyer who easily gets sold through, even though it's just a retracement into the structure. See, this is the problem with buying this, you guys. It's not that it's not bullish. It's that putting your stop in the middle of the channel is asking to get stopped out. Okay? The middle of this channel is where most of the volume is usually traded. If you look, if it's balanced, most of the volume is going to be in here. See that? And then a very little bit of a volume is going to be out here, and out here, and out here, and out here, right? And there's none down here, but that most of the volume is going to be in the inside. You don't want your stop loss to be where the market is most likely to go. You want your stop loss to be behind that point, right? So if you're going to buy the green bar, if you're going to buy this, like I said, I'm not saying it's horrible, but if you did, what you'd have to do is then you'd have to find a support nearby that's below that channel, and you'd need to put your stop under that. So your stop, in my opinion, would have to go here. Well, unfortunately, even if you bought the bottom of that bar, that's a pretty big stop. Like if you bought 11,750 and you put your stop at 11,725, 25, that's a big stop, right? And remember, sometimes we're just wrong. So instead, now sometimes it just goes and you'll miss it, right? If you didn't buy there and put your stop down here, it could just take off. That happens, right? But usually, at least with NQ and ES2, it does this. That's usually what it does. So you don't have to be in a big anxious rush to buy with the very first anxious buyer, because one of the reasons that this aggressive volume shift happens is because everybody who sold this knows, not everybody, but many of them know that this is support. And so they just got into here for a little 10-point move. If you think about it, one process that would work is find a high, wait for a break of that high over that's a pink bar, and sell it, and then cover when you get back to the VPOC of that area, right? So in this case, What if that was my process? It's not, but let's say it was. I would measure this, and I'd say, okay, there's where all the volume is. That's where I want to exit my trade. That's my target. When do I get in? When we break this with a pink bar. As soon as that pink bar forms, sell, cover, right? Because I assume that wherever the volume was on the way up is usually going to get supported. And if you see here, it's pretty good, right? That's where this comes from. That's why there's a buyer here more than anything. It's not because there's just speculative longs. It's because there's scalping shorts exiting the market because they are confident that once it goes a little bit lower, they're gonna get squeezed, right? But if your process was sell this, take it back to the volume anomaly, yeah, a lot of times you're gonna end up buying a little early, right? You're gonna exit that trade by buying, and it's gonna cause this little pop, and then if you put your stop right under that and you bought it, you're gonna get crushed, and then it's gonna go without you, and you're gonna tilt, right? So anyway, where were we? We were here. So I said that this one, for the exact same reason, is still a good buy. Did we get here? Yeah, I think we did. So same exact process, assuming you think you're still bullish, and there's no reason not to be, right? There's no buyer at the high, right? All the volume is down here. The last time we were up in this area, the buyer's all the way down here, right? It's this guy. That's like the only aggressive buyer there was, because these pink bars, they're buyers, but they're not aggressive. It's just mark up, right? So where is price probably going to come back to? Right there. Would I just put my order there and sit there with a 5-point stop? No. But once I see it trade, I'm going to look and see, oh, am I still bullish? What we are taught in the trade and perform room, which is correct, is find an apex. If price comes under that apex and traps back in, it's a buy. That's still true, right? The problem in these conditions, again, is that there's a trapped seller above that apex. That trapped seller is not going to let, most likely, price get down here very often. Sometimes it will, and and the trap will still work great. But oftentimes, this guy's all the volume on this bar is not at the bottom. See, that is way up here. So even though the price of the bar closed down here, most of these traders actually were in the wick. See that? That's where most people traded in here. So if they got short and they were hurting and offsides here, guess what they're going to do when it comes back towards their entry? They're going to buy. When did they buy? When the momentum shifted and when they were aggressive buyers. Because think about it, what do aggressive buyers mean? It means it's someone putting a lot of effort into the market. Why would they do that? Probably because they think the market's going higher, right? Once again, pink bars, a real easy way to see if it's time to be aggressive, are pink bars getting fully retraced? Nope. Are pink bars now getting fully retraced? Nope. Right? We get it right to the Voodoo range level. Not even retracing the most recent pink bar, which should be here. And we close bullish. Right? So when that happens, I'm just not selling. I'm just not a seller. So I miss this and I miss this. But I also miss all of the gross stops that you take trying to sell the top, trying to guess the top, and I can aggressively buy this one, and this one because I don't have to wait for the apex trap since I know that sellers are still trapped down there, right? Now notice here, something's changed here. Remember back here, we had sellers at the lows getting trapped, right? We broke out, pink bar caused it to pull back. Where does it pull back to? Right above the trap sellers. You get an entry, pink bars, goes higher. They come back, they try to retrace the pink bars. Where do they come back to? Wherever this trap seller was, right? Well, now, once again, we've got some pink bars and we go higher, but look what's missing back here. There's no aggressive sellers here. No aggressive sellers. See that? So now, since there's no star and no triangle down and no orange bar and no yellow box, nothing, it's just a regular old bar, it means that, like, there's now a better chance that this apex gets tested underneath. And if it does, it's and it makes a new high, it may not work for a buy. It might, but it's if any of them are going to fail, it's going to be that one that didn't have a trap seller that produced a big push off the high. So let's see. Okay, we get another pink bar. Remember, these pink bars did not get retraced. We're still bullish. We're not selling. We're just wondering, I wonder if this is going to hold if they ever pull it back here, right? They pull up, look, they put another pink bar in. What happens? It gets immediately retraced. That's not bearish. It's normal, right? The issue is that pink bar was a breakout. See that? Whenever there's a pink bar that's a breakout, we know that a pullback is potentially imminent. And in this case, this pullback went down to this low and then bounced and closed higher. So for the time being, it looks bullish to neutral. But then what happens is they try to push higher and it comes right back again. If I had bought this, right, and I see a pink bar break out, and then that pink bar gets fully retraced, and when we close bullish, what I should be doing, I don't always do it, but what I should be doing is thinking, okay, this buyer by default can be considered an aggressive buyer because he is responding. We've fully retraced this pink bar, yet he's buying at the highs, right? That is a breakout buyer that's aggressively buying whether or not there's a algo signal or not. It's not pink. And it included a wick that retraced an entire pink bar, yet we close bullish. Like, I could turn it into a signal, but I haven't. But if you're looking for a way to, like, what a signal might look like, that would be one, right? I already have the green bar that's showing that there's potentially a trap seller at the bottom. I've got plenty of signals to show me aggression. Even without a signal, I know that this is an important bar. And so if I'm a buyer down here, I really don't want to see this low get taken out because otherwise there are no trapped sellers down here. The closest trapped seller is all the way back here. Aggressive seller. Unless you want to count this one. And this one, his VPOC is way at the top. And he's already been tested. See that? So as soon as we get this bar, I know already that this low, it's vulnerable, right? So you could definitely just take profits because there's a good chance that it's done for a bit. Otherwise, another tactic would be measuring where the volume was on that move up and then saying that this is the conservative way to do it, that if I get a close that's bearish and the yellow VPOC line gets underneath this pink line, which is where all the volume is on the way up, well then the smaller time frames volume is getting underneath the bigger time frames volume, and chances are the move is almost certainly done for now. That would be the conservative way to do it. And then the one in the middle is just to put a stop right underneath this low and call it a day, which I think is better if you have heavy delta up here, which, like I said, I normally show, but it's disappeared for the moment because the market's closed. So that system would have gotten trailed out right here. But notice it is a purple bar, right? So, but it's not at support, right? These purple bars getting bounced like this, they happen at support because it's that would be again a sign that buyers let go of their they exited the order book and then suddenly re-entered. And so that in and of itself is unusual and reason enough, if it's bullish, to think that they might be speculating the market higher. Well, up here, a purple bar up here, it's still, the conditions are still the same. It's buyers pulling their orders. But are buyers pulling their orders here because we got under a support? No, like the higher low is down here, right? That's not a support. So why are buyers pulling their orders here? Probably because there's buyers trapped up here, right? And they are responding to that. And we got underneath this wick. So on a tiny, tiny time frame, it is a higher low. But I think the right move here is actually to exit there. It's a little bit more aggressive, but in my opinion, that is usually right because, like I said, when you don't have a trapped seller down here, there's a decent chance that you're going to get a chance to buy down there. So I don't remember what happens, but you can see it right here is where you've got your purple or non-purple bearish bar with a VPOC below the volume from the wave up, right? And then if you want to be extra cautious, you could make sure that the volume on the way down was at the top, and it was. So the lower of those two VPOCs of those waves, which in this case is this one, this is your like de facto volume support. It's where most of the volume was when everyone thought it was bullish. And on this tiny time frame, we've now gotten under it. Even though there are buyers participating in this bar, this range, there are buyers participating in it, yet they closed it bearish. Here they closed it bearish, but there really weren't any buyers participating. They just pulled their orders. They folded. So it's not surprising that the sellers would get this close. But if it's bullish, they should have saved it. It doesn't mean it'll always go lower, but the chances are it's probably going to real support. Now, it tries to get down here. Then it fails. Prints another pink bar. This one's got another sign of aggression on it. Could you buy it? You could. I personally don't have a reason to, because we've gotten under that volume, and there's no trapped seller down here that we're trying to hold hostage. So I'm personally not trading that. I'm watching to see what happens to that pink bar. Remember that pink bars usually get retraced if it's not super bullish. So if you're going to buy this and you're going to put your stop right underneath it, you better think it's ultra bullish. And like this no longer looks ultra bullish to me, it looks more balanced. Doesn't mean it doesn't work. That's my interpretation. Now, if you're looking for shorts, right? If you trade the market both sided, this would be my first opportunity for a short personally. And I realize it's not the top, but the reason for that is that, first of all, there's no trap shorts right in front of me, right? I'm not getting short at that point where all the trap shorts were, like they were down here, right? They're not here or here. They're lower. So I could get short here and travel back into that area and still get paid. Okay, that's important. You need risk reward. Second of all, we have volume trading underneath. We've developed volume. I'm trying to keep my lingo the same. We've developed volume on the bars underneath where most of the volume was on this wave to the high and wave off the high. These pink lines is where the majority of the volume was. Again, what I'm doing is I'm looking at things from multiple time frames. So if this was a bar up and this was a bar down, I'm figuring out which bar had the lower volume, and in this case it's the wave up, and that VPOC is right here in that pink line. So on that higher time frame, like if I pull up this 80 tick, on this higher time frame, this bar here, the VPOC is 760.50, and that's where this is. See, and that VPOC is below the VPOC of whatever bar would be formed by the wave down off the high. So it's the low. Since I'm looking for signs of bearishness, I need to get under both of them. So it's the lower of the two, getting the VPOX of the individual bars on this time frame below it, and having buyers participate but yet fail to hold that level, meaning the bar's not pink in my system. But if you didn't have this system, you could still look at it on the DOM and see, you can probably identify, if you know how to trade the footprint in the DOM, you can probably identify whether or not buyers are participating or not. And if they are, they should be holding those levels. Okay, so again, I don't love this buy. I think this is a good place to wait for the trap back in, rather than being aggressive, because you don't have any trapped shorts right next to you, and right next to support, and you potentially now have trapped these buyers above because you've developed volume lower, and you've now got aggressive sellers following through. So again, it's a lot of analysis, but eventually, especially with a system like an algo that gives you these visual aids, I don't actually have to think through all that, right? I just have to look and say, was there a star at the low? Right? Here there was, so I'm not selling. Here there wasn't, so I can consider selling. Right? So when I see no star down here at support, and then we go higher, we break above, and I'm like, oh, this could be a failed breakout. There's no trap seller down here. Let's see where all the volume is. Where is my signal going to be valid? It has to be under this. Right? We get volume right there, developing underneath where all the buyers bought. What does that mean? These guys are now potentially trapped. I don't want to buy, I don't sell breakdowns, right? I want to follow a seller into the market. So I'll let the market fall and relax, right? I'm not just going to sell. I'm not going to buy that because I think it's neutral to bearish. It's no longer ultra bullish. I'm not going to, again, now I'm getting conservative with my bullish trades because of the lack of trapped sellers and the possibility of trapped buyers. They look what buyers try to do. They get this aggressive buyer with these signals, and then they give another sign of aggression. So two different signs of aggression, but both indicating that buyers are really putting a lot of effort into saving this, right? Usually that'd be bullish, but in this case, it's not, because where they are trading into is an area of trapped buyers. So it's exactly like what we saw back here, where they tried to save the trapped seller. So it's exactly the same. Where was that? Right here. So we had trapped seller, trapped seller, trapped seller, right? We trapped them all up here. What did they do? They tried aggressively to free them, but failed. They couldn't get these guys freed. So the market goes higher. This is the exact same thing, only in reverse. We've got trap buyer, and then sell off, and then they try to save them. They aggressively try to push the market higher in like every way possible. They shift volume up. They push price quickly. They like position their buys in a way that could spook the sellers. How do sellers respond? Aggressively. Right? So that process, you just need to recognize what that looks like. For me, I personally needed to turn it into signals. Some of you are going to be able to just look at this and be like, well, yeah, obviously there's trap buyers up here and you got under it, so sell it on the retrace. Like, if you can see that on the footprint, cool, right? Great. I had a hard time in real life when I put size on, believing that what I was seeing was good enough. Because it's like, it's kind of trapped, and it's not a lot of buyers, right? There's all those, like, you don't know what the exact conditions are. Whereas with this system, it's like, it either is or it isn't. It either is or it isn't, right? It's either a star or it's not. Hold on real quick. Hold on. 1 second. So to answer a text here. Okay, so yeah, so when we get this guy right here, that is the first. If I was looking for an opportunity to fade this, this is the first like opportunity to fade it. The problem with this sell is that your risk reward is not great. What I really want is a bigger retracement that then fails to get over this. So I really want it to get back up here into this higher channel. And you can see that this did not quite make it. So this could just be buyers taking profits, but they are doing it aggressively, and we potentially have buyers trapped. So it's not wrong. It's just pretty aggressive. But then you'd have to add, again, where does your stop go? It really should not be in the middle of the channel, right? And here, your stop usually goes behind the bar by a point. And it's right in the middle. It's still in the middle of the channel. So it's not perfect because your entry is down here, right? And then where would your stop, where would your target be? Well, in this case, I said that I'd want to get back to support or get under support so I could maybe look for a trap back in and treat this like a neutral balanced market. Well, in this case, there's trapped sellers down here. So this support is probably off limits. We're probably not going to get there. We talked about that earlier. What about this one? There's no sellers here. So if I wanted a target, it would be right here. Well, now hopefully you can see where the problem is with selling this is that you are looking to go from 11,760 to 11,745, let's say. But to have a reasonable stop, you really don't want your stop here. You would want your stop like here at like 83, above the channel. Well, that's not great risk reward, and so that's not pretty. But if you take the trade and you put your stop here, you're probably going to get stopped out, and then the trade's going to work. So if there's a chance that if you think there's a chance that this is like the top, you can be aggressive and you'll probably catch some of these. The shorts are just tough because they usually develop quickly and they don't always give you great risk reward. But it technically, in my book, would be an aggressive opportunity to short. But I don't think it works, if I remember correctly. Let me see. Oh, so close, right? So it gets super close. Maybe the next one will, but I don't think it will because it's got this little flag on it. Again, you wouldn't normally see that until 2 bars later. All the rest of them you see right away. But you can see that this low, where we wanted to look for our long, did not get met. But the good news is that this one did. And that one got one of these sideways triangles. So again, technically, this is a long because we got underneath a apex and then trap back in. And then again, now if you look at the long side of it, your stop can go under support. That's good. You're buying right here. And where are you targeting? Well, where are the trap traders? They're up here. That's an okay risk reward, 1-to-1, right? If it's going to be wrong, it's going to be here. But these trap back ins work so often that even though there's potentially trap buyers up here, the chance that you're going to get 10 to 12 points is so high that you can honestly take them every time and do really well, like above like 65%. Even in balanced markets. The only time you don't want to take them is if you're fighting the trend. And here it just doesn't look bearish. So I would say take it. And I actually took that trade in real life. And it hits it gets really close to your target. So like I said, my target, it would be I didn't put it in the right spot. My target would be the POC. Well, first of all, I'd take some off at about 10 points. And then the rest of my target, because it's a trap buyer, would be the POC of this green bar where the buyers are. And it just barely reaches it. And then appears to reverse. Now, remember, I said that if this aggressive trader was positioned up on the higher channel, then it would be a valid short because we've got trapped buyers. So guess what? We get another sign of aggression. The high on this is inside the channel. We can short now, so you can actually reverse. Once you see, well, you'd get out of your long right there, like at the high. Your stop would go and then you'd have to wait to enter until this was printed, and then anywhere in the bar would be a good place to short, and then your stop just goes one more point to. I don't think I can slide that up. One more point above that. Right, and then now again, where's my target? Are there trap shorts? There was a short here. He's not yet trapped. See how we have not yet gotten a VPOC? Look, this guy, this VPOC here, is below this VPOC, and even the high, we did not get the VPOC above the high of this bar. So there are clearly some shorts in here that did not get trapped still. See that? And so it's not officially trapped yet. We would need to produce another bar that's not pink on top of this one. Doesn't have to be the very next bar, but another bullish bar up here, right? Because these are all range based. So if it goes down and then up again, now he's trapped. And now I can start to be aggressive to the buy side again. For now, it's neutral. He's not yet trapped. So where's my target? It's still here. Even though I tried to save it here, even though they tried to save it here and it was a long, your short target is still right here at 45. And you get it, right? And so you can, hopefully you can start to see how this works. And like, you can just literally do this over and over again, and you just have to have a process. Is he trapped? Am I bullish? Am I bearish? Can I be conservative? Or should I be conservative? Can I be aggressive? So all the way back here, again, just to do a quick review, we said, okay, we're clearly bullish. Now we've trapped shorts. We can be aggressive and start buying all these signals, right? And all these, like if it's and then this guy's trapped, so now we can buy this. And then this guy's trapped, so now we can buy this. And then we could buy this. And now suddenly there's no more trapped sellers, right? Whoops. And now there are trapped buyers at the highs, this green outline. Those trapped buyers are here. So that's our target for any buys from going forward. We get a buy entry there. It comes up and hits our target. Oh no, sorry. This buy entry only gets 10 points, and then it stops out slightly if you bought this. Oh, I said I wouldn't buy it though because there's nobody trapped and it's not an apex trap. This is your primary buy. That's right. There's no trap seller here. You skip this one. It's not an apex trap. This one is an apex trap. It's got a low, lower than one of these apexes, and a bullish close. And it's got algo signals on it, making the chance for continuation better. Where's our target? Back up to the trapped buyers up here. Once we hit that, if they reverse and give us aggression, it's a sell because we've gotten trapped buyers, aggressive sellers, and our high is inside of this channel. And the reason that matters is therefore our stop can go above the channel where it belongs. Our entry is anywhere inside that bar, and our primary target is down here inside the anomaly. And you can see that it goes right to the anomaly and then it bounces, and that makes sense because this is now another apex trap. It literally, you guys, it just go all day, like back and forth like this. That's the whole, that's it, right? Now we have an apex. We said before, if we trapped underneath that apex and came right back, we should probably buy it. Guess what? Still a buy, get 10 points. Are there trap buyers? Yes, right? We know there are trap buyers. If you don't have the algo and you can't see it, or you don't have my algo and you can't see it, you can find it there, and you can say that these guys, whoever bought up here and higher, got trapped right there. They got volume developed underneath on this tiny time frame, and then they came back up and they tried to break it and they failed to break through. These guys are still trapped. So the exact same rules, only in reverse, now exist for the sells. In other words, if I come up here and I reverse with a star down in here without breaking up above there, it's a short. And if I get up here and I trap back in short, it's a short again, right? But in the meantime, I could buy this and target that. That's fine. Sometimes you'll get a runner to go a lot further But generally, I'm taking half off at 10 points and then seeing if I can get back to that trap place again. And I wouldn't sell that yet, but it might be wrong. Yeah. So now this is a sell. So see how this one, it's close, but it's like right at the edge of the channel, right? This one, clearly the high is inside of the channel, so that's your short. So if I bought this, so again, it's usually the right idea to take these apex traps. Very rarely is it wrong. There's no divergence here. We've trapped buyers. If you're going to skip any of them, you skip this one or this one. But even if you took it, realize that from here to here is more than 10 points, and from here to here is more than 10 points. So as long as you're not letting the runners trail you out and you lose a bunch of money, like as long as you're only keeping like maybe like 2 micros or something, and you're not like you're not expecting high a day, and instead you're taking most off at 10 points, or else wherever you have I missed a trap trader. So the reason they stopped here is because I didn't realize that this guy got trapped. Look, he got trapped right there. See how we got the entire bar, including the high, below the low of this bar. So now this area that's of trap buyers where I expect to target gets moved to here. And what do you know? As soon as we trade above it, we reverse. And that should make sense because we're trading it into an area where buyers were offsides and they're getting an opportunity to flip, and so they're going to get out of their position, or at least draw. They're gonna unravel a little bit, if not switch directions. And like I said, I just don't like selling this one because it's not all the way inside of the channel. But if you do sell this one, it's not wrong. You just have to put your stop a little bit higher than 1 point. You just need to you probably have to put your stop like maybe up here, like here. You'd put your stop maybe there if you sold this one. That's even a little bit high, maybe there. Right? Find a support. Find a resistance. Dyslexic. Sorry. Find a resistance that's either inside or above the channel, and then you got to put your stop above that. But then your entry could be anywhere in this bar. So if you saw this and you're like, I don't really want to sell down here because I want to have better risk reward, instead you could wait for this to retrace and sell that. That's okay. The problem with selling this is that you can't put your stop there, because it's going to get eaten a lot. It's going to get eaten, right? And then it's going to go. So now this is the interesting part here. If we know now that it's potentially a bearish rotation, we know that buyers are potentially trapped here and here. We can see that we have not trapped any sellers, right? No aggressive sellers down here have been trapped, right? So now the question is, well, where do we target? Well, this apex already got tested and we got a bounce. So what I do is I've got these little momentum indicators. See these little arrows? These are signs that they're trying to shift momentum. It's not just volume. It has to do with it's a formula, right? There's a mathematical formula that looks for momentum. Kind of similar to like how the MACD is built, but it's not a MACD, but it's kind of similar. And it's saying that there's a likely shift there. And generally you will get a MACD shift. It's just, that's not what it's looking at, but that's a way to see it. Wherever you see these arrows, and then the yellow arrows are the opposite, these guys. And that's probably going to be where the MACD shifts. It's just like, I'm using the MACD as an example of a momentum indicator, but it's the same idea as that, right? So what I could do is, like I said, this one has already been tested. So I would go back and look for the last one before that, which was here, right? And I could say, okay, if momentum was shifting up, but now we're getting either bearish or neutral, the normal thing to do is to make sure that everybody who bought when momentum shifted is still interested in buying. So what you can do is let me just see if there's one right before it, because if there's I just need to see the rotation. Yeah, so see, this would be my primary location, because there's not a momentum shift like right under it. It like went all the way up, made a full rotation down, and then they shifted momentum up, and there was a trapped seller there that has not yet gotten released. We've not gotten all the way down here yet. So that should get tested. That white line. See, they released the seller there. Oh, that already got tested. Did we do this one already? That already got tested. Okay, so that's how you would get this level. So I'd have to go to the next one. So we go back. There it is. So the next momentum shift, and again, you can see it on the MACD pretty clearly. If you want to use that, it's not gonna be perfect, but you're gonna get the right idea, right? So in retrospect, it's gonna be this guy here, and you look to the left of him, and you'd say, yep, he had someone trapped. So most likely, there's gonna be a reaction in there. It's going to be hard, unless it's bearish, it's going to be hard to get under that trapped seller and stay under that trapped seller, right? And again, you don't know that until you've gotten this rotation. But once you've gotten that rotation away from it, like however you want to mark it or note it, you really don't need it until you start breaking down through the apexes, through the bullish apexes. Once you start making lower lows, in other words, now this becomes a target, but because there was a trapped seller behind it, we can say that really we shouldn't get an apex trap off this, but we might get a test of this range. So now, let's look to the right. So we get, like I said, the short signal is here, and it goes not there. It doesn't make it. It just gets bought up. What does that mean? It's not bearish, right? It's still valid. They just don't always pan out where you think they're going to go. But if this was bearish, the next step would be here, right? So in this case, did I make 10 points? Let me look. So I'd be getting short here. I know I took a couple stops today. Yeah, so I did not make, so that was one of the full stops I took. So selling this, stop up here, looking for 10 points, if not 20. And it just couldn't get through here. Now what's interesting is the algo didn't identify any trap shorts here. Oops. Here, let me just, there's too many lines. The algo didn't identify any trap shorts here. And we did have the trap buyers here. So you would think that resistance would continue to hold, you would think. But the truth of the matter is, especially the upside, the market just sometimes floats primarily to the upside, and especially if you don't have a lot of participation overall. So if volume is low, if institutions are on vacation, if it's off hours, right? If the hours are not a time when everyone participates, you're not always going to hit your target. And it's one reason why Simon doesn't like trading slow markets, my coach, because he knows that the likelihood that you need, basically, you need speed, you need market speed, you need tempo to be higher for shorts to work. So your choice, what Simon's done is he's identified recently that we have not had a lot of participation and we've not had a lot of speed, so he just doesn't short. He sees them, he calls them out, but he doesn't take them because he knows that they're not going to work as often as the longs do. And if he's just patient, he can just wait for the long and do better because he misses all the short stops, right? Some in the room, like me, still take the shorts and we do okay, but our longs pay better than the win rate is higher. So some of the very best performing traders in the trading room I'm in only trade long right now. Just because the shorts, you'd think it's like bear market, it should be, no, it's like, it has nothing to do with the higher time frame. It's just the tempo currently is not conducive to getting big roll downs all day. You'll get some. I'm not saying it'll never work. I wouldn't be shorting if it never worked. It does. It's just that the likelihood that you're going to get your 10 points or more to the short side is like half as good. Like look at here, we have trap buyers, yet the buy still worked. You still got 20 points here. 15. At least 10, right? 10 plus. And then the short sets up with trap buyers and it goes nowhere. So I personally didn't buy this green bar because I thought we were bearish still. But I will say when that short stopped out right here, that is a clear indication to me that we are back to being bullish again and that this little neutral zone is probably done. And so once again, I'm going to go right back, even though I took a stop, right? I'm going to go right back to the beginning of my process. And I'm going to say, what am I looking for? Okay, I want, if there's no trap sellers, I want apex traps underneath a bullish apex. Where are the bullish apexes? Right here and right here. Oh, by the way, how do you catch this? Is like this. Ronnie took this trade in the room, I believe. The way you catch this is it's an inverse head and shoulder apex trap. So we have left shoulder, head, and then right shoulder develops here. And the way you find it is you put here, lines. You put the marker on this apex that's the left shoulder, and you're looking for a situation where you trade under it, and then you come right back up into it, right? So it's not trapping under this head. It's trapping under this left shoulder, and it produces an inverse head and shoulders. And those can be really explosive in bullish markets. They work to the bear side too sometimes, but that is how you catch that trade. I wasn't ready for it, honestly. I thought we were going to get a little bit of a roll down here. A lot of times, yeah, I don't know. I just didn't see it coming. So. But it exploded 50 points. So and like I said, if you caught it, cool. But that setup works a lot. But notice we have no trapped sellers down here, no aggressive sellers here, right? Oh, this is the open. So this wasn't the sell I had. It did a similar thing later on. This is the open. Ronnie did take that trade though. I think he said he only got like 10 points on it though. He didn't hold it for the full 50. But remember our trapped buyers, we should keep an eye on them because they're now going to get released. So our trapped buyers, remember, were here and here. And that's what was keeping the market from exploding higher. Well, and that's what was getting me, what would make me think it's a short. Well, once those guys get freed, which happens when the yellow line gets above them on a white or green candle, a non-pink bullish candle, they get released. So these guys are no longer held hostage. And then once we get above this one, which happens right there, see? Now these guys are released. So now buyers are no longer trapped. Notice here we put in a pink bar, just because I mentioned it before, and you retrace the whole thing and then continue higher, bullish to neutral, but normal, right? Here, purple bar, retrace the whole thing, close bearish, bearish to neutral, right? There's nothing abnormal about that. It's totally normal. This one, on the other hand, was a sign of bearish aggression because you have a purple bar that was not fully retraced on the first pullback. See that? So that was another little clue that you might have a bear trade setting up. But now it's been retraced, and so that area is no longer interesting to us. We have another pink bar, and that pink bar gets taken out. We trade higher, right? Notice all of the delta that starts to come in here. So a bunch of people are selling down here as we break this low. And there's a aggressive buyer up here. See that? They're trying to shift momentum to the downside. That's what that yellow arrow means. And so when I see all that together, when I've got big aggressive buyers at the high, an attempted momentum shift to the downside, all happening at the same spot, I'm going to mark down here and I'm going to say, look, it is bullish for sure, unless we can trap some buyers above that and then liquidate below it. Otherwise, I want to buy every single trap that happens in this area. I want to buy all of the pullbacks that look aggressive. And if we trap this seller, it could squeeze. But once we trade under here and we put volume underneath 11,780 or so, wherever this attempted shift was, these guys are all going to be trapped, and it could be a liquidation break to the downside. So you need to be aware of where those like important pivots are, and that's the sign for me that there's a pivot there. I talked about it earlier, where you could use these arrows to say like that's where my target would be for a short if I thought I was going to be short, or but that's really in this case, like if I for some reason if we trap buyers up above and we start coming back, this is where I expect buyers to show up anyway. If buyers show up down here, I want to be a buyer. If buyers aren't showing up, something's wrong, right? So we come up, we break out with the pink bar, we immediately retrace it. Totally normal, nothing's changed. If you bought down here, you just stay long. It's pretty tough to buy the high day for. I'm not going to buy this breakout, but technically star down followed by diamond up is a momentum indicator, and it is a valid long for a scalp. So I could have taken it, seeing that we are now pushing hard to the upside, but I usually don't buy the high day. So, but it does work. It goes higher, right? Notice that we're now pushing without pink bars here. Whoops. So all of this, sellers are participating here, but buyers are winning. Very, very bullish. Now we finally get a pink bar. The next bar is bearish. And so where are we headed now? Well, they're going to try to save these trapped sellers. Remember, there are trapped sellers back here. And so we're gonna see the exact same thing as we saw in the beginning of the video, where they're gonna try to come back here, but they're probably gonna fail. And so should I expect that this guy gets tested? Should I put a line here and say I can get long if I get a trap underneath that? The truth is I probably won't get it if I do that. Instead, I need a sign of aggression. I'm not gonna short this because I'm not suicidal, but I want a sign of aggression. If it comes down here, great. But what I really want is a sign of aggression to the upside, and I would love it even more if we could get a sign of aggression to the downside first. So we get purple bars coming down, and we need to see if those get retraced, because if they can't retrace them, we don't want to be a buyer. Okay, they start to retrace them. Note there's still some area that's not yet been retraced. So I'm still a little bit nervous here about being a buyer. They retrace it fully right there, which is great for my long bias. And they put in an aggressive seller, which is great for my long bias. The mistake people make here is they see this and they see it pay 20 points and they're like, oh, I want to be short. Like, I'm not saying it's wrong, but it's not going to work very often because look, if you think about this, all of the volume here, is right here, right? And so if you want to be like if you want to think about this logically, to even think that we're going lower than this apex, we need to trap an aggressive buyer up here, and to do that we need to put volume below where all the volume was on the way up, which was here. Notice all the volume on this aggressive bar was way up here above that line. It is below here, right? There's a big volume push at the high that gave us this little extension down. I'm just looking at this as an opportunity to get in lower, right? So there's my aggressive seller. Now I want a reversal, a purple bar followed by a star, a purple bar followed by a green bar. All of that would be great. Otherwise, if they do get back here, an apex trap underneath that would be perfect. They approach it, they get under it with the purple bar, and they keep going with the purple bar. And there's our trap. So we did trap down here. We got all the way down here. They got through this buyer. They got under this. No, they didn't. They didn't get under it. They didn't trap under it. See, they just missed it. So by Simon's rules, this is not a buy because it's not an apex trap. If you're new to Simon's process, you skip this trade. If you've been doing it for a while and you can understand how this works, you can be a buyer here, even though it didn't trap, because it's bullish. And you've still got this guy trapped short as long as you don't push volume on a bearish bar below here. So for me, I can buy that, and it sets you up for basically the rest of the day. Notice where the price goes. It goes back to where these sellers got aggressive. What do? They try to defend it. Why? Because they don't want to get wrecked. But guess what? They get trapped. They trap them, and it just keeps going, right? Now, do you want to buy this? I personally, like I said, do not buy these breakouts at high of day. It is a momentum signal, though, to get an orange bar followed by a star to the upside. The problem is now if we get under this guy, we could now get a liquidation break. So they go a little higher. We can go through the same exact process. If we don't have the algo, we can say, where's all the volume? Okay, volume is here. We need to get a bearish bar underneath that to have any chance of rolling over. They do it. Now, here's the thing. You also need to get volume below wherever all the volume is on the way down. You need to get volume below like this bigger time frame, right? And that, I believe, occurs here. So this right here is the sign that now it's neutral and no longer ultra bullish because we've gotten underneath the volume on the way to the high. Okay, so now neutral to bullish. What do I need? I personally need to see a short get trapped, a seller get trapped, or I need to go back and get an apex trap. It's back to neutral, right? So I am personally not going to buy this, but the truth is it worked. On the smaller time frame, it was an apex trap. It's kind of hard to understand, but this is a smaller time frame. It's the exact same algo, but it's a smaller time frame, and they traded under and then got back up. So this worked on the smaller time frame. I just didn't take it because I thought there was potentially trapped buyers up here once we traded down here, but it was like this one didn't. See how it can't get under this? Right? And instead, where are they finding buyers? They're finding buyers in the same spot that the sellers were active before. And so the other way to think about this is even though it happened at the highs, these guys all got trapped right here. See that? So I personally didn't see that. Usually I look for my trap sellers at the lows, at support. But what they're doing here is they are trapping. They're so aggressively bullish, and there's just there's no sellers that any aggressive seller, even though they were at resistance, that new resistance is now support, and they are trapping them. Should I be bearish? No. Right? I personally don't buy this one. I don't buy this one very often, but I could see a logical reason to do it. Instead, I look for the next setup with aggression that has a better location. So an apex trap would be an example, but I am very rarely going to sell this unless there is a new, let's see. So it makes a new high, right? Oh shit, it's getting late. Makes a new high. Oh, and the volume's at the high. So maybe you could sell that. I'll have to look into this one because this is technically a trap back in. You have no pink bars left. See, this pink bar got left behind. I don't think I'm selling that very often. I'll be honest. I don't think that's pretty aggressive for me to sell that. And then if I would have gotten trapped back in here, I would have bought it. It just didn't set up, unless it sets up right here. No, then in that case, I think I did buy it. No, yeah. So it comes all the way back down here. Is there another head and shoulders set up? So that would be this one. Did that get reached? That was not reached. So it just came back to the Buddha range level and bounced to the pink bar. And notice they can't immediately retrace the whole pink bar. So if you didn't know this was bullish, you know now. And if you got short here, you get out. Because now it's just gonna get silly. Right? So you're not gonna catch every single move. This was just a complex pullback. It might have set up better on the smaller time frame. Let me check. Oh, I gotta erase the lines here. Let me just see what it looked like on the smaller time frame, because I'm playing with this smaller time frame to find more trades, and it works pretty well. So okay, so on the smaller time frame, what we're looking at is a high initially here. Volume develops below that, making it bearish potentially. That's the apex if you were bullish. When we come back to the upper quadrant, we get a trap back in, which is a bearish entry. So that's valid on this smaller time frame. Like, it's technically valid here too. I just usually don't take it. I'm just not that aggressive with my shorts. So then the question is did we then have a reason to get bullish down here? It came into this moving average. There's really no... Oh, are there trap sellers down here? There's trap sellers. Look at that. So you didn't see them on the higher time frame. It's here. They look pretty normal here. This guy, I guess, could be one. But it's lower than that. Right? Hold on, where was that? Now I lost it. They came from... Oh, shit. Where'd they go? Now I'm confused. Okay. Where was I? Now I can't find it. Did I? Here. I was like, where the hell did it go? Okay, so it was down here at the open. Right, so the open trap sellers on the smaller time frame. We return to that trap seller area and we bounce off of them. That's pretty hard to take. I'll be honest. You have to be really aggressive to buy that star. But it might be a measured... Let me see if it's a measured pullback. There's a setup where you buy the stars at the 61.8% pullback. Whoops. A setup I don't usually use. Look at that. See that? That's a setup I've been coached in, but I don't use very often, but that's pretty neat. So that's how you catch that, I guess. Okay. That's here. You didn't trap any shorts to the left of it, so I'm just going to keep looking for my conservative trades. We get pink bar, then a bullish bar into this low volume node. And so there's really no reason to think there's going to be a big breakdown. Oh, did we trap these sellers? Hold on, I forgot to think about the sellers at the highs. This guy got trapped, right? Yeah. So that should be where we find buyers. Oh, they didn't reach it. That sucks. It just... I guess it trapped him too. So he got trapped, and then the triangles got trapped right here. And so when we get back into that area, I know we don't get all the way down here. Let me just show you the triangles and stuff. So right there. So once we get back into there, you have an opportunity there. But that, I don't know how else to get it. Now, notice here, this one gets trapped, right? So you'd think, and he gets trapped once it trades over it without any, this right here is where he gets trapped. But now the other side of this is, oh no, that's interesting. So the buyers didn't get trapped. I'm really surprised we got this liquidation break. Unless I measured that wrong. We should have had a trap seller here. They interacted with him here. Oh, I see what happened. We got under this, I bet. So once we get under this one, so you wouldn't really know here, other than the fact that you just had pink bar, orange bar. Oh, the volume. I forgot about this little trick. So this is something I've learned recently. When you get heavy, heavy volume in one location, like just a couple price points away, that's what makes this green outline. If then you trade above it with a pink bar and you come back down with an orange bar, it actually produces a sell opportunity. And it worked yesterday, and it worked when I was back testing it again. And then notice how then that becomes resistance. This is just a new idea. This now becomes resistance, and the 2-bar combos start to work to the downside. It works the other way too, but I see it more at the highs. So the other way to measure this didn't work out. You didn't get a seller below this until after the breakdown. So you just didn't get an opportunity to take advantage of it, because that seller didn't show up technically till here. That was the first seller that got underneath this push, and this guy doesn't get trapped until here. See that? So there's two ways to look at it. You can look at volume, I'm just showing you that so you can do it without the algo. But technically, you could just find the highest buyer with aggression is right there. He gets trapped here. See that? That's where you get the yellow line below him on a bearish bar. But what you would need then is a pullback and then a rollover. But on the short side, you don't always get that. Sometimes they just liquidation break, right? Comes back down. I'm sure there was a reason that worked out. I gotta go. So let's just quickly see how this played out. So no trap sellers down here, but then this guy gets trapped right here. So now you can start being aggressive to the upside again. You'd have to be really aggressive to take that one. And then you once again have trapped buyers. Nope, no trap buyers here. No setup, no setup. So that's your first aggressive buy, but it's underneath the trap seller. So that kind of sucks. You don't really want to buy this one. There's no aggressive signal, but this one does have aggressive signal. It's just a question of whether or not you want to be still be aggressive even though you've gotten underneath this seller. That's how you, but that's definitely a tough one. That's definitely a tough one. To take. Then it pulls back. Now the one I got went to 96. Was that one? No. Where's the one I got? Right there. This is the one I got. So here they got an apex. They went under it, came back. You could buy that every day. That works, right? Like all the time. That usually works. The tricky part is you got volume below all these guys for a moment. So that means that if there's a sell up here, you should take it. And it does set up right here. So that's where I should have exited. Yep. And then you can technically take that. But do we trap shorts? We trap shorts right here, I think. Yep. So shorts get trapped when we get an orthodox close above. Oops. Which happens here. Oops. One bar before that. Right here is the orthodox close above. Shorts are technically trapped if you had a setup. And that would be an apex trap, right? Apex trap. You could buy this. But in the process of this coming up, I think longs got trapped. Yeah. Big time. Oh, whoops, I went too far on that one. So you were prepared for a bull setup, but as you're waiting for it, because here he gets trapped, But as that seller gets trapped, they roll it over, and buyers up here get trapped there. So once that happens, now you're looking for sells off of that right there. And it does not set up. It just rips right through. So the buy worked, but the sell didn't. And that's just the way it goes. So again, the apex trap is this. Right? So it's a lot harder to flip back and forth. Is it bullish? Is it bearish? Whatever. But if you just remember that you can pretty much always take the bullish apex traps, you do fine. And then if you say, okay, now I can also add a bullish star and green bar and diamond entry if I trapped a seller, then you can catch even more. And then the after you figure out when to be aggressive and when to be conservative, only then should you really think about, okay, when should I start thinking about selling? Because shorting, you're gonna be right about the analysis like this, but it's not gonna work out for things like, for reasons like there's too much space here and there's not enough speed as it comes up and grinds up and it doesn't give you an opportunity. So like the shorts just have to be perfect for them to work out. And even when they are perfect, they don't always work out. It's just that when they do work, they work so fast that they're exciting and we remember them as if they worked great. But so many times they set up perfectly and they just don't work. Whereas the longs, even if they don't set up perfectly, and like in this situation, you have longs potentially trapped up here, like these guys are clearly trapped by the time it gets down here, but sellers can't even take advantage of it because they can't get it back up here. And by the time they do, you can see that buyers are in complete control because they can't even retrace the whole pink bar. See that? So by the time you see this, if you didn't know already, by the time you see this, you know not to sell, which is great information, right? You can save yourself a lot of money by just knowing not to fight that. But the inverse of that would be if this purple bar wasn't here, and then but see they retrace it here too. So there's really and see how this purple bar gets retraced, right? But this one doesn't. This purple bar doesn't get fully retraced. So that's your first sign that it might not be as bullish as you thought. You would know here. All of a sudden, you're like, wait a minute, I might have just trapped a buyer. But like I said, if you get too conservative and you say, I'm not going to take apex traps, well, now you miss the entire move back up and the short doesn't set up. So you just sit here holding your pants, So it's like, it's hard. It's not easy, right? It's tough. But you want to have those steps so that if you think something's going to happen and it doesn't happen, you know what to go back to. All right, guys, I got to go. I got some stuff going on this afternoon. I wish you guys all a happy Thanksgiving. Remember, we are closed tomorrow. I would recommend spending some time away from the charts, spend time with family, enjoy it, right? Don't try not to think about the markets. And then come back, maybe even take Friday off because it's only a half day. Come back over the weekend. Study, make sure you've got a clear process, exactly what you're looking for when it's time to trade, and then really focus on just fixing one thing in your system. Just get better at whatever is costing you the most money. Don't get over emotional about it. Just think, okay, how can I mitigate this one mistake I keep making? And what you'll find is the solution is to produce a process that's objective. And if you need help making an objective process, you guys can join us in the trading room. You can email Simon it's trade, the letter N, and the word perform, tradenperform@gmail.com. Looks like this. You can give Simon an email and ask him, mention that you follow me and tell him that I told you would get a free week in the room and you can trade with us and see how we put together trades. And like I said, otherwise just follow me on Twitter at RedBenTrader, and I look forward to, and don't forget to subscribe on YouTube. And then, I'll see you guys next time. Thanks for